funky, y'all. Those chords. Yeah. Funky. Yeah, let's jack to this one, y'all. Let's forget about the facts of this one. Release the energy inside you to this one.
Yo, what up, everybody? Sorry I was a little bit late today. My daughter skipped her nap. She kind of delayed everything. But welcome to Roaring Kitty. Looks like we got someone in. Welcome. Thank you for joining. Appreciate it. And yeah, let's just kick things off today. I got the beer. Cheers. Cheers, my mate. All right. So now that we've been through one stream already, got a little bit of a better idea as to what we're doing today. So that's great. Hopefully it only gets better with each passing stream. So I think let's just take a peek at the dashboard today to just see what was moving. I kept my eye a little bit on the market today as opposed to Monday, so I have a little bit of sense of what was happening. Things were up a little bit. Still relatively quiet though, nothing too big. We see some precious metals were up today, silver and platinum, oil and gas. Some commodity stuff was looking good, so that was good. I always like to see that. Oh, you know what? Actually, let's kick this off by showing you. I didn't get to show this last time, but I brought it up. If you wanted a general idea as to what the portfolio allocation is right now, here you go. So this is, what's this, by sector? You can see this is the Roaring Kitty portfolio, of course, and then we got a 8% in cash. What is this? Consumer. This is probably consumer discretionary. 24%, 20% energy, 16% energy, 16% materials. You can see. I mean, this is probably a typical portfolio for a value investor, I'd say. But yeah, so that tends to be, these tend to be the industries that I'm focused on. Because that's often where, because these tend to be more cyclical industries, of course, right? And they tend to be more volatile, so that's often where there's opportunity. So you can see right now, because I have so many damn positions, that I'm pretty, from my own side, I'm relatively diversified across all these different sectors. Of course, they're small positions, but even still, that's big for me. It's big to branch out like that. And some things are oddly classified. Like there's some things that are like in real estate that like could be other ones. I forget off the top of my head. But anyway, so here's the sectors, and then I can break it down by industry. Here's what the industry looks like. So you can see specialty retail up there. I think I suspect GameStop has a big is the lion's share of that, of course. And then oil, gas, and consumable fuels, energy, equipment and services, chemicals, and so forth. So you can kind of get a general idea as to the types of industries I'm going to be dealing in here. I know so many people these days are very interested in tech and tech generally, but all the hot stocks, right? Those tend not to be the ones I'm dealing in. So hopefully that's okay. And I feel like a lot of people these days want to hear about that stuff, and that's cool. But fortunately, there's plenty of people out there talking about that stuff. So that's great, but that's just not my specialty, because those things tend not to be undervalued all that frequently, whereas this stuff, this shit, as some people might view it, that's where you see some undervalued stuff, especially these past couple months, especially this year. So anyway, I figured I'd show this off. And then here's the sub-industry. So if you get a little bit more granular, you can start to see the breakdown even further. It's essentially that. And you can see, then you start oil, gas, and exploration. I'm heavy into energy. When you start seeing energy prices below $0, the futures contract, if you force my hand, I have to. And so, actually, the energy prices didn't bottom at that time. They bottomed, the energy stocks bottomed before then. I want to say it was a couple months before then, or a couple weeks, something like that. And so I've been, I bought more then, and computer and electronics retail, I'm certain that's GameStop. GameStop's a big, I'll show the portfolio here in just a second, but I just want to see this myself. I actually haven't looked at this. I pulled it up because I had forgotten to do it Monday, and so I just want to look now. Oil and gas, equipment and services, a little bit of a more levered play to the industry, you know. Commodity, chemicals, gold. So yeah, I got a good chunk in gold. Of course, that's because a lot of these names have risen so much. But in materials generally, I like. And yeah, so it's good that it's breaking above 2K. I think that's relatively bullish, I'd say. Short term, I don't know. You could pull back. If I myself, I'm not adding right here. But what the hell do I know about short-term moves? I don't. But if it pulled back, like say 1800 or so, I might add some stuff. But this timing type stuff. I'm not that great at it. But I keep an eye on it just for adding and trimming, that type of stuff. Just not for big decisions. But you can see home building. Home building's still 4%, which is kind of big because I've been trimming. So I mentioned the other day that I've got a heavy allocation to home building, but I've been trimming all the way up, and it's still 4% because it's just up so damn much. So they could keep running here. I'm not really sure what to do. We'll check it out today. Let's help me out, assess what I'm going to be doing here in real estate generally. But and then everything there it's a bit too granular. I don't even need to go down that path. So sub-industry, that's just maybe for the heavily weighted sub-industries I may be taking a peek at, but I'm maybe more focused on like sectors and industries. But even then, I'm a bottom up investor, and so it's not like I don't come in here and say, all right, I want to put this much towards consumer discretionary, this much toward energy. I'm not doing that. I'm looking which stocks are undervalued, and that's what I want to do during the stream too. We're going to be looking at the stocks. I just thought it'd be helpful for myself to just to take a gander as to what the breakdown actually is. But so this is a reflection as to what I saw as undervalued at least a couple months ago, but even still right now. So I see a couple more people joining. Let me just pull this up. Yeah, I think I got the stream set up so you can go back and you check this out. But I'm just showing off the sector and the industry and the sub-industry, so just so you have some idea as to what the breakdown is in the portfolio. But yeah, and then cash 8%. That's a good size cash position. So now let's check out the Roaring Kitty portfolio, because now with this amount, I just want to check up on what was moving today in the portfolio. Sorry, I'll get to what was moving today, but I just want to see this because I want to update one thing. So the GameStop position has actually, I think maybe it wasn't up to date because I don't think I didn't buy any this week. I think I didn't update the spreadsheet, so it's closer to 8% of the portfolio. I think there was one more late purchase last week, and I just hadn't updated it, and then it turned out that the stock price is already jumping this week, so that's big news. But so yeah, that's 8%. But anyway, I just wanted to show that off, and then it's just a little bit more up to date because I updated it today. I made sure it was up to date. So all right. So before we get to this, all right, we'll go back to the dash. I'm not going to click around. Let's just take a peek at what was moving one more time. Now that I showed off the allocation, but we got silver and gold, so that's what made me think of it. Like I do have some allocation to precious metals and silver and gold and palladium. We covered some of those. That Sibanye Stillwater was a company that's still in the portfolio. I have, you know what one is? One you make, so, is it well, first let me just pull up SBGL. What is it? Sibanye, SBSW. I forget the new ticker. They just changed the ticker, so I want to have this up here. But you know what else I want to do is check out this one. This is a copper firm, and this one's in the port. Like I just noticed today that how much it had run up. I'm pretty sure my cost basis is like right around here. I had been following it already, but I like had got out of it because other stuff was looking interesting, and then I think I'm like, all right, this is cheap wherever it was, below 30 cents. And then it's like, how's it doing on the chart? All right, so it's starting to break out a little bit. Anyway, it's a copper firm, so I know it's not precious metals, but when I think of metals, I'm kind of grouping them all together in my mind. But anyway, I just wanted to see, where is that in the portfolio? See what I mean? I apologize. I know I'm jumping all over the place, so I don't know how that is as an experience, but this is kind of how I do things when I'm like doing research. I jump around and seeing different things. Sorry, I'm scrolling. I'm looking for TGB. Okay, so all right, so it's down here. It's only 0.6% of the portfolio, but I think I must have sorted by what percentage gain. You know what? Let's do that right now. Let's jump around once more time. So if I can sort this. This is the Roaring Kitty portfolio. I can sort by the biggest gainers. I think I might have been doing this, and so if I sort by column. Oh, I don't have cost basis. I don't have it in here. But what we can do is do from 52-week low. We'll do 15, and I find that's it's kind of a good proxy for what my gains are roughly, because I was pretty close on many of these. Not all of them. I didn't catch the bottom. I was pretty close. I can't be world not averaging down. But so let me see here. Is TGB up here as one of the top performers? No, it's not there. I forget what caught my attention then. Okay, so you can see these are some of the better performers that have been in the portfolio since. This is from 52-week low, of course, but the 52-week low for most of these was in March, and so you can see some of the better performers that were in the portfolio. I did own Penn National Gaming was one of the better performers in the portfolio. It went up significantly. Michaels wasn't a big position. Okay, so I just want to check this out. AR, yep, okay. It was trading below $1 there for a while. OVV. BXC was up again. I know we discussed it a little bit on Monday. It keeps on going up. I didn't trim anything yet, but I might start taking a little bit off because it's getting up there. What is it? 1.5% of the portfolio now. So OMI. Okay, this is roughly in. Oh, man, Chart Industries, huh? Look at that, huh? Damn, some of these bounce so cleanly off the bottom. It's really impressive. It's nice when that happens when you're in it, and then it's painful when you miss it. But I hadn't even heard of Chart Industries. Even right now, I'm not totally sure. Like it was a new. If I do this, I didn't add Yahoo profile. I believe it is related to the. I knew it was related to energy. That was why I got it, because I wanted some energy exposure that wasn't directly tied to exploration and production. And so that was part of my, if you saw the other videos, I have a screening tool where I'm actively screening for stocks and stuff. And that was one of the times where I'm like, I want another way to get energy exposure, but I felt I had a bit, as you just saw the sectors and industry, I had a lot of exploration and production exposure. So I was trying to look for a way to, like I said, just get more exposure. So I came across this. I said, what the hell is this? I've never even heard of this one before. And it's a good-sized company, too. I want to say it's over $1 billion in a market cap now. But you can see right here, you can pull it up. Do you see that okay? That helps. I can just zoom in for some. I tried to zoom in, obviously, on the spreadsheets, but also on the web pages, too. So you can see, I can see I'm blocking it a little bit there. So I'll move that around. China Industries, company always do 4 segments. But this is a bigger company, so let me just see what that market cap is. Jeez, if you see a lot, I was talking to one of my friends talking about some of the stocks that I'm dealing in, and he commented on how they're all such small price point, like they're like $10 and below. I never registered with me that's people see the price point and they think, oh, that's a sketchy company. Like which is the price per share matter? It doesn't, not to me. But I know it's like some people see. So I see $72. I don't see too many high price stocks in my portfolio. Anyway, so yeah, $2 billion. So here I was. It was in March. But I'm buying a $2 billion company. Oh, that was probably a 2. I think I wanted some size. I think I mentioned this before. But one way to manage risk is deal in larger companies. So often the mispriced stocks, they tend to be ones that are smaller in nature. That's just the way it works because it's difficult for larger investors to take positions in it. So you see the mispricings there, but. That doesn't mean I don't want to say that I'm a strictly small cap investor, because I totally am willing to deal in larger stocks. I don't know what everyone's definition is. It's kind of subjective as to what you consider small cap, mid cap, large cap. I would say usually the stocks I deal in are less than 5 billion, usually less than 3 billion, with the average, like maybe the median's like 500 or a billion or something like that. I'm not sure off the top of my head. But anyway, I think this was another reason. So I wanted something that wasn't directly energy and exploration and production, but also in size, because I didn't want everything to go bankrupt on me. I know as it turned out, a lot of things didn't. And I was saying that last time. I wish more of my positions did go bankrupt, because I kind of feel like I even could have taken more risk, as much risk as I had taken. But in this case, then I was starting to get nervous. Well, if things did turn to shit even worse than they did, and they didn't bounce back as strongly as they did, which was a possible scenario, it just didn't happen. Where you can never know these things beforehand. Then I didn't want everything that I had to go bankrupt on me. So this was what I mean. There's many ways to manage risk, and because I deal in some speculative stocks, one of the ways that I'll manage it is just dealing in larger companies. So anyway, I forget how I got on GTLS. Well, because look at this. So it's a bigger company, right? But it's one of the best performers year to date, or from 52-week low. Yeah, look at that. See this. So I really like stocks like this. This is the thing too. So sometimes sometimes you're on the hunt for 5 baggers and 10 baggers, right? It's not. You would think naturally that the best stocks to deal in for that are the super small cap, like nano caps and stuff, and really small caps. But that's not always the case, because with a stock like this, just as an example, or Tech Resources was another one a number of years back. they're so small that the big investors can't even get into them even after they rise in price. You can't. It's kind of nice when you can find a stock like 300, 400 million, and then they get to $1 billion, and then the larger investors can start investing in it. You know what I mean? They have capital to throw at it, and so you see. So that's what I mean. So I say I'm managing risk, but you're also kind of looking for some big winners. I honestly didn't think it's tough for me to remember with so many names, but I don't recall thinking GTLS was going to be a huge winner. I'm confident this is more than I thought it was going to be off that low. What is this? What is it, 16, 32, 4-bagger? We got it in the thing. What was it? This keeps throwing me off because it says portfolio. What's that off the low? Almost. So it's what's a 4-bagger? Almost a 5-bagger. This is what I'm. So let's look at some of these market caps. Actually, this is always educational for me too, because this is what I mean. Hopefully, we can learn together as I do this, because I feel like everything I'm doing is I'm always testing little things and seeing what works and what doesn't work. And right now, like I haven't done this before since the March lows. I'm doing it now for the first time, where I'm seeing what are the biggest jumpers, at least for stocks that are still in the portfolio. I've sold out of some, and I'm not capturing them here, which is unfortunate. So I'm missing. That's too bad. But regardless of the ones that are still in the portfolio, we can see. Here we go. So Camping World was the 10-bagger. I mentioned that. So that's exciting because I kind of discussed that quite a bit on Monday. That Camping World. Sorry, I'm moving the screen a little bit. My apologies. Camping World was a big position, and I watched it all the way down. Anyway, that's the 10-bagger so far of the bounce back, which I'm excited about. Penn National Gaming. I didn't know about that one. I didn't get the full 10-bagger on this one. But Michaels, that one I'm a little bit frustrated about. I should have bought more down at the bottom. I thought it was going to go bankrupt. It might still go bankrupt. They do have some solid cash flows. Anyway, but look at the market cap. This is what I want to check out, the market cap. Look at these. So, damn, Michaels is still over $1 billion? That was a mistake. See what I mean? So, like, Michaels must have been, what was it at the low? Wow, it's at $8. So at the lows, it was a quarter of that, less than that. So it's if you're at your 52-week low and you're still a $200, $300 million market cap, that's kind of promising because I mean, you can go bankrupt with a market cap that size. That's okay, but it's not uncommon. I mean, but if I was gonna deal in something, if I was gonna deal in something that might go bankrupt, $200-300 million ain't bad. So damn, I kind of wish I did more Michaels. This is I don't know this company that well. This was my attempt to diversify, and I just happened to get it. Got lucky on it. Carol's, but look at these market caps. So these were small, but look at some of these are. I mentioned OVV. That was a big one for me. $3 billion, $2 billion. BXC was a really small one. Yep. So some of these are bigger. GTLS. I just mentioned that one. Okay. So yeah, when things are in the gutter like they were in March and April, it can be best to deal in like stocks that at that time after everything has sold off quite a bit. If you're in the $100 to $500 million range, I think that's. Excuse me. Oh, I'm gonna go for a drink right now. After I talk nonstop, you know. So this is okay. So that's good to know. Yeah, you gotta be careful. So notice there's not too many like really. BXC was really small at the time, and I tend not to do in super small companies like below 50 million. It tends not to be a risk I want to deal in. So I'm not too surprised by this. But again, these are off their 52-week lows. This is interesting to me. Yeah, you know what I mean. That's why it's not always beneficial to focus on the super small. There's definitely a sweet spot. I think the sweet spot is like after things have been sold off, like in the 100 million to 500 million to 700 million, something like that. That's where you tend to get big winners. All right, so this was good to check out. All right, was that a tangent? I forget. All right, I'm gonna go back to the dash because I forget what I was doing. But I knew we were working through this. Oh, because energy and oil and gas had jumped today. Okay, so what's oil doing, by the way? I mean, it's doing nothing, right? Look at this. Oh, it's above 42. It's doing nothing. I mean, this is interesting, right? I mean, it's just so flat. But in energy names have been flat too. As you saw, I got quite a bit of exposure to it, so I tend to have a better idea as to what the underlying commodity in this case is doing because I can see what the stock prices is doing. They're just kind of jumping around, bumbling around. But and then natural gas. What's natural gas doing? It was a big jump out on Monday. We spent a lot of time on natural gas on Monday. How am I missing it? Oh, these are ETFs. Are these ETFs? Here we go. Sorry about that. Oh, it's over 220. Look at this. So it was on Monday. We were looking at this, saying how good that looked. I have no short-term forecast. When I'm commenting on something, you at least have to be thinking whatever I'm saying is I'm just looking at least a couple of months. These daily moves, I have no idea. But we were discussing I was just talking how it looked bullish, right? I mean, if you back out a little bit, look at the weekly. That looked bullish, and taking out two like that, and we talk about natural gas. It's volatile, but the natural gas names are kind of following suit. So that's it. So it still kept on going those couple days. Yeah, and it's breaking above. This could become support, right? That's what the books say. All right, so natural gas is still running, and let's just take a peek at some of the natural gas names. So I was looking at this today because they reported that other day. We touched on that. But here it is up against resistance, so something I'm testing here. If it breaks through resistance, is it going to take off? It's definitely been in one of these boxes here that people say, and I have some options, and I haven't been too nervous about it because I've been trimming, but it's been staying in the box. So even on these drop downs or the rises, of kind of just watching, just tracking. That's so much of what I do. It's in action. So we'll see if it breaks above here, and then let's see the other natural gas names. Look at this, Intero, very similar looking chart. And then what's another big one? SW1. This one looked a little bit not quite as good. Let's do EQT. Oh. Yeah, so they all look similar. See what I mean? And yet natural gas is kind of breaking out a little bit, but that can be volatile. So I'm not so sure. So I'm watching this right now because I have the options. I pay more attention because you gotta be better with timing, and it's super tough. I'm always trying to get better at that stuff. So this is something to watch right now, especially because natural gas is like one of the few things out there that there's stuff happening. So, and oil is kind of flat, and gold, I mean, that's not true. I mean, I say that's the only thing that's happening. It's the only thing that's really happened that's got my attention because I got some big names in the portfolio that are tied to it. But obviously gold is let's take a look at this chart too. We said how this chart really looks good. Short term, like I said, I don't know short term, but this is a bullish move in that perhaps on a pullback. Let's see what it does on the RSI. You kind of want it to break above that one, so they say. But damn, look at that move. Yeah, this March move didn't make. It's because everything was selling off, right? But this didn't make much sense in the grand scheme of things. And that now we get a break. So it's taken out. It's taken out that high, of course. Whew. So. One would think, and so many people are saying this. That's the thing. When everyone knows it, does it still happen? Let's test. Is it going to bounce back to around 8? That's what I was saying. I guess this is what was in my mind. If it pulls back to 1900, then that'll be retesting what appears to be support, and it could be a good time to add. I don't know. Let's test it out and let's see how it goes. Because I do think this could be a multi-year trend, even though I think we're 4 or 5 years into it. But these hard asset trends and in paper trends, if you're dealing in bonds and so forth, they last long times. They tend to be multi-year trends. Okay, something to watch. I mean, there's something happening there too. Natural gas, solar. Oh yeah, I saw someone comment on this. Let's see what's going on with solar. Yeah, look at this. I believe this is an ETF. Yeah, Invesco Solar ETF. There's a couple ways. There's what the most popular one is First Solar. I believe I've owned this before. I'm no solar expert, but that's a common way to play it. What's the market cap? I should have added Yahoo Finance to my shortcut. It's got to be big. Yeah, 7 billion. Solar, huh? So they tend to track energy a bit, right? When energy starts getting really expensive, don't these tend to? I don't know. Just correlations, right? Mental correlations. I don't even know if it's true. I mean, it seems to be tracking gold, not these spurious correlations, you know. Okay. All right. I don't think I have any solar exposure right now. It's just something I'm just popping open. Steel, what's steel doing? So this is a good one for me to know because I'm dealing in some industrial type stuff, you know. A gap up, okay. $30. This is a small ETF though. I don't know how. Damn, that's so good. You want to see this though. Okay. Just a quick gander, looking good. I need to be faster about this, so I'll keep practicing this. But okay, let's check. I want to check rare earths. This is something that it's in the risk thing too. I feel like it's a way to gauge risk, because it seems like a super speculative thing. But risk on, gap up like that, risk on. Will it stick? I don't know, but I'm just watching, just tracking. That's all. Okay. Insurance. I'm not too into. I should look at. Let's see the banks though. Let me see regional banking. I'm not big into financials, but it's probably good to know what's going on. So they're just being duds right now. I'm not. I just mean the stock price is just not doing much. And let me see. Is this bigger banks maybe? KBE. Yeah. Okay. Trend is up though. I don't see anything scary. Nothing super bullish, at least on this front. I think banks performing well is probably somewhat bullish for the rest of the. Hanging in there is somewhat bullish for the rest of the market. Anything else? Sorry, I know jumping around. So value up today? Is this? Oof. Oh, sorry. S&P 400 value. So let me just take a peek at this. Okay, trend is up, looking good. I don't know these value ETFs and growth ETFs. I think I said this in one of the videos. It's like, what's it based on? Just basic price to book stuff. That's what I mean. People say value's been underperforming, and they use these ETFs, and they're not necessarily good indications as to how the style is performing. But regardless, I know other people looking at it, so we're pulling up. And then I do want to check out the Russell 2000. Let me pull that up. Oh, that looks good. We're up against some resistance, though, for what that worth on this one. But right in the nothingness area. I just see it, and I think nothing alarming. No particular opinions on what's coming next. Okay, so now I'm looking at the risk column over here. We see some action down here, right? You expect these things to pop because we saw oil and gas was up today. That's what I mean. You see the moves, and I've done this before. You're watching your individual stocks, right? Maybe you're only watching one or two, just as an example, and then you think, oh, this stock was up today, but the move is explained by other variables that maybe you're not keeping your eye on. Now, I'm guilty of this even today, where I'm like, oh, this is moving today, but it's always important to take a step back and look at everything. This is a big reason for the dash. I'm not so much dialed into each of these things or what they mean. I just mean I'm looking at them, tracking what's going on, and just make sure I can at least understand what's kind of going on in the market, not so much predict what's going to go on in the market. And but anyway, when you do that, and first you're looking at your individual stock, maybe you back out to the industry, to the sector, to the market, and or to the asset class, and so forth. And you're like, all right, so of course, if the market's up or whatever, these things are going to be up too. If oil's up, going to be up, then these are going to be up too. So these don't really stick out to me. That's a big move for tech, though. And Alcoa, man, I got lucky with the Alcoa timing. That was another one. I wanted a big name with some commodity exposure. Boom. And some I was trying to some other metals exposure besides gold and silver. And looks good. Looks good. This in my head, I have conflated the performance of commodities and value stocks and emerging markets. I don't have some back-tested study to show you right now. You got to do your own research. I should follow up on this myself, but I think if those are all performing well, they're kind of going to go up together. And that bodes well for me because I have so much exposure to all those styles and to those sectors and stuff. So something that let's see if value continue. Notice how value is up today and oil. It's just one day, but value is up today. Oil is up today. Co is up today. Commodity, yeah, okay. I like tech. Tech did one thing. So I was buying some tech. I like tech as a cow. And I know you know what I noticed today. Einhorn was bought. I didn't read his report, but I had heard that he bought tech, which I was excited about because I've been heavily involved in tech since 2015, 2016. It was a 10-bagger for me back in the day, and that was one of those ones that was a bigger company, and the risk was way overblown, and it wasn't too small, blah blah blah, and it was the best performer. And this time, I was hoping it would get even cheaper than 6. I bought some. But compared to some other opportunities out there, I didn't think it looked too compelling. I'm like, $6 is a great price for this company. I considered it relatively lower risk, so I was buying it. But I was trying to take on more risk, and I thought, damn, tech, if you were just a little bit cheaper, I would have gone in way heavier. Would have been a much bigger position. But it just wasn't because I'm trying to capture a weighted average return, right? And so I just. What I was doing, I was pretty active in March because every day, it was a new environment for me and for many people, and I'm just like trying to way more active than I usually am. I'm very inactive, except when something's really catching my attention, there's a lot going on. But March I was very active, and so one day I was trying to raise cash, sell positions. I don't know. I was a new environment for me. I was trying to learn as I was doing it, and I was trying to put some capital toward lower risk, underpriced names and so forth. And so I was tech was one of those names where I'm like, oh, well, if the market sells off another 10% tomorrow, right? Can you even believe we're talking about that? That there were 10% moves in the market. This March is crazy. It's so, I mean, you can't say we'll never see anything like that again. You absolutely could, but it's a very rare occurrence when something like that's happened. But so then you're in March, like this could keep on happening. It did keep on happening, so you're trying to play it accordingly. Not that I had any insight as to what was going to happen each day, but I wanted to make sure I didn't have too much risk exposure. And so one way to do that is to put some of the capital into some risky names, but safer, larger names that if it does sell off another 10%, it's not going to be halved by 50%, which some of my names were. I'm like, geez. So tech was one of those positions where I was kind of dealing in it like that, but it never became a huge a part of the portfolio because I didn't think it was cheap enough. I wanted it, but like $4, and anyway. So then I saw I have a lot of overlap with, Greenlight, Einhorn. I have very similar styles to him. It's funny because I know he's a large hedge fund and he deals in some of the bigger names, but because I deal in some of those bigger names for reasons I was just talking about, we have some overlap. There's been like I don't even know, 7 or 8 names that I've dealt in and I see he deals in it, and it's just by sheer coincidence. And I always get excited about that because I respect Einhorn. I know people kind of are like downplaying his skills because his hedge fund hasn't performed that well. I can't comment on that. I haven't even been following his performance all that closely. But just the stock picks themselves, I'm like, oh, nice. Because when you're an individual investor, and a value investor in particular, it's quite lonely because you're the only one dealing in some of this shit. And it's like outside validation that that someone who is considered competent by other folks is dealing in the position as well. We might still be wrong, but it's just a little bit, it's a vote of confidence to a degree. So anyway, I'm a big fan of tech, so I wasn't surprised to see Einhorn, who I respect doing it because it was an obviously great opportunity below. I don't know when he bought it though. I didn't see that. But at these prices, steal. I mean, I don't want to say easy double, but pretty safe double. And then if you back out, I still really like the I wish I also was looking at the longer term trend, and that sell when was that sell off last week? Look at that weekly, but it's still in like a little box area though, so there's something to keep your eye on. I'd love for it to sell off again. If it sells off, everything else is selling off with it though, so it's gonna be okay. All right, but anyway, I talked about in the videos, but again, no one's gonna watch those damn videos because they're too damn long. I messed up, my bad. But this risk column here, there's just a whole bunch of random ass things in here for me to just gauge risk a little bit. There's like some oddball stuff in here, like the put call ratio, and I'm no expert. I even have a definition in here to remind myself. This is for me and for you because I let me pull this open. You may know this put call ratio. I mean I know it, but sometimes as you can see, I'm tracking so much that I start to lose track of stuff, and it's just helpful to have a quick reminder as to what the thing is and what I'm looking for. I even concluded myself, hey, when it breaks below 1.2, here, now let me pop it up. Is it here? Oh, I actually included a link to the definition on stock charts. Isn't that a riot? Ah, that's a hoot. Like here, look at this. So I'm not saying that you should. This is a big thing that I use. It's not. I'm telling you. But I feel like, all right. Well, if I have a couple columns dedicated to risk, let's toss it in there. You know, look at this. And the put call ratio is when there's much more put activity, which is bearish, than call activity and so forth. So you're going to see a big jump in this. When it's high, it means there's much more put activity, which means people are bearish. Blah blah blah. So when it's high, that's when you should be buying. And look at this. It's like it's textbook. It's textbook stuff. That's what I mean. I say what the books say. Excuse me. Especially with technical analysis because I'm testing stuff. But a lot of things. This was textbook. March was textbook for a lot of investors out there. And now it's not really indicating much to me. Let's look at the long term. I just want to see. Can I do this? Am I going to break my chart? Yeah, look at this. Oh, okay, maybe if I just change it to 10 years or something. Some of these charts, they lose their relevance if you back them up. This is still okay. It's like my opinion on many of these charts, this one and some other ones that are in the risk thing, is that, and you'll see other people say this too, only at extremes so they register in your head. Like there's nothing for me, for me. Everyone's different. Everyone has their own style. For all I know, there's people out there who only rely on put call ratio and they make a ton of money, right? How can I know? But for me, if it's here, this means nothing to me. But when you're here, maybe there's none that are too low, right? How about can I do 20 years? Can I do 30 years? What the All right, do that. Oh, sorry. I don't know how my volume is. Look at that. So that's what I mean. 2004 was still the start of some good value styles performing well. 2004, 2005, 2006. So, but the extremes on the upside, you can see 2007. So things were good. Look at that. So that was kind of indicating something early 2007, 2015. Yep. This was a good time to buy gold, by the way. Got some gold calls at the time. That was when gold was the cheapest. People forget that. I believe this is where the equity was the cheapest on many of these names. Is that a bold claim? If I do, this is the old Barrick Gold. If you remember Barrick Gold, then they merged with Randgold. Yes, look at this. See? Okay, so some of them was September, but those were the lows. And I think of 2015, 2016. I think those really cheap prices were late 2015, early 2016, which was the case for energy and a lot of materials. But precious metals in particular, bottom in August, right around the time there was some China-related news in August too, and options were really cheap. And no one wanted gold at that time. I picked up some out of the money calls on some of those, and it worked out well. Anyway, so why was I going down that path? Oh, put call ratio. Let me close out some stuff. I got to close out stuff because it forces me to. But anyway, there was a lot of uncertainty and people kind of losing it a little bit in August right there. So that's not too surprising. But anyway, late 2018, April 2020. So anyway, something I've been trying. I want to keep my eye on it more. I think I have a chart that I can scroll through all this. Check this. Do I? If I do this, watch this. I think I can scroll through all this. Sick. VIX, there's your VIX, which is breaking below. Look at this VIX. That's a risk indicator, right? If I look at everything in conjunction, this is the new highs. This looks good. Look at that drop off. But I'm not so much looking at this every day. I'm kind of just doing it now, just to do it. I hadn't done it yet. What's this? I don't even remember what this is. All right, so it's not totally aligned with this. Maybe I need to reorder. Okay. Anyway, I just want to poke around here just a little bit more. Sabanye, I got that in there. Freeport. So look at all these names. These are up big today. What was the news on this? What was the news? Let's check. Was there some? I should know the news, right? Is this embarrassing? Because I know everyone else knows this news, but I'm focused more on the stocks. I'm sure there's some economic news, or what's today, Wednesday? What did they release? Did they release any news on? I don't know. Just quickly look. Those were big moves for those names. Those are bigger companies, you know? Damn, I wish I had. I should probably have some better news things to get me right to the point. What do I do? Watch this. Can I do this? Can I just look at the company on Seeking Alpha? Sometimes it's pretty good like that. Here you go. Copper. Oh, here we go. Perfect. So it was copper, right? FCX is a copper. I think they got a little bit of gold too. Tech is very diversified. North America. This is why I like a big part of the reason I like it risk-wise too. North American, heavily Canadian firm and diversified. Why am I making a pitch for tech? I'm just explaining why I like it, just so you know. And but it's some other stuff too. They got some coal and some other stuff. But all right, so it explains. And then Alcoa was up, and then so car price surge after robust factory data in China raises hopes of a demand rebound in the world's top metal. Boom. See? Thank you, Seeking Alpha. I got to say, they've definitely been getting better about it the past couple of years. I appreciate it. All right, so check. Let's see if I got to show up for copper? Copper door. What the hell is that? No, I don't have it. Okay, so let me do this. I think it's like this. All right, it's up. Damn, copper price? Yeah, look at that. Look at this chart. Support, hitting support right there. That week, it was probably March. Yep, March. It's not signaling anything to me now, but it was up today. That explains the move in those names. And not that it matters too much. This is just me trying to get back in the flow of tracking these things. That's all. The goal is I want to spend more time on the names, but I'm just trying to get more used to using this spreadsheet and streaming and stuff. Lumber, okay. Cummins. We're up today. So auto, yes, the auto industry turning around. I think I mentioned the blockchain. Yep. Oh, was that Riot? Yeah. Yep. It looked good around here. So this is the thing. I'm a value investor, right? But so I say how I don't want to. I say I am a value investor, but value is subjective, right? Where people view value it varies from person to person. And even, people think value, they think fundamentals focus and so forth. But there's other ways to perceive value, and one of the ways is by looking at charts and stuff, in sentiment and psychology and stuff. And I'm not an expert on these things, but it's just another way to diversify the portfolio is by adopting some other styles and stuff. So things like Bitcoin and I know that's another popular thing that people probably want to hear about. You won't hear about it much here because I don't follow it that closely, but as far as I watch the charts and just the fervor of it, and the same thing goes for blockchain. Is this even a blockchain? I know they changed their name to blockchain, but I know other people group it in their heads. Anyway, this whole crypto stuff, I can see value in from the psychological standpoint and the technical standpoint, such that I don't even need any fundamentals. I don't want to box myself into what's Riot blockchain going to generate for cash flows? What the hell? I don't know. I assume many other people don't know too, but it seems like it still could be a trade, and as it turned out, it was a good trade. I want to check. Actually, I do want to check out Bitcoin today, but check if you see this chart, and then just risk on behavior. This is why it's in that column, the risk column. I think I'm sure I have Bitcoin in there too. Is that when people start getting I want risk. These things could perform well. And when they are performing well, it's like, all right, no one's freaking out right now. No shit that this stuff was collapsing in April, because who the hell knows what it's worth? It's so difficult to value it. So people just like, I don't know what this is. Get it off my books in March. And now they're like, all right, I don't know what this is, but it's going up. Get it on my books. You know what I mean? And so I recognize that people do that. And so I started as I'm still a value investor, and I could never take a heavy position in something like this. This is the thing. I can only ever take a heavy position using value investing, using cash flows and stuff like that, a strong balance sheet and so forth. That's a shortcoming of what I view technical analysis and sentiment type stuff. I would never be super confident in a position like that. I need cash flows. But for a trade, a small position, you see how many positions I have right now. This is the type of thing I'm trying to dabble in, and so far it seems to be working out okay. And then I'm not surprised by this. I know some people, it kind of seems like some people get angry that cryptos go up or that Bitcoin goes up. It's a personal thing. Who cares? What does it matter? I don't understand. They get upset because it's really difficult to value. Maybe they're upset because they don't own it or something. I don't own Bitcoin, personally, but as far as the chart, can I pull up the chart? I mentioned Riot because I did own it, RIOT. Not because I have any strong conviction in the company, but just because of crypto and that type of stuff. And I was looking at the chart of Bitcoin, and I thought it was a way to play this move. And look at them moving up in tandem. You know what I mean? So it turned out to be. Oh, hey, this makes sense. But let's back. Now I kind of want to see this because. Okay, we're in a little bit of a box area. Okay, let me draw the line. So the books say, I'm not trying to say I'm going to make a trade or anything like this. Look at this. So this is what other people are seeing. This is what I'm seeing. This looks like a breakout to me. And I'm going to test this, not necessarily by building a big position or anything like this, but let's test this because what is this, a weekly chart? That matters. It's a weekly chart. That's bullish. Technically speaking. So that's what I mean. I'm not saying that this is a buy. I'm not saying that. I'm saying this is bullish. So let's test to see what happens. Let's keep our eye on. I'm going to keep my eye on this. Same thing for Riot. But that seems to me undeniably bullish. So if people are complaining about it, I don't know. Should I trade it? That's the thing. It's so tough for me to do this type of stuff. And then you look at, but then you get the, I can just draw lines all over this damn thing, right? That's technical analysis. I don't know. Watch the RSI too, huh? Look at this. I'm just drawing lines all over the thing. There ain't no science. I know that much. So I'll take a screenshot. I'll take a screenshot of this view. This looks ridiculous. But I don't know. I'm gonna keep my eye on that. I'm not so people saying, oh, it's gonna collapse or something. Like, I don't necessarily think that. I think this looks bullish, and I'm gonna keep my eye on it. And Rye was up big today. Anyway, not because they're not even in the Roaring Kitty portfolio, but I don't think they are. But an indication of like a little bit of risk on. And I know risk on, it doesn't mean they're buying all types of risk. I get that, right? There's different types of risk and people playing it differently, but excuse me. Shit, okay. So this seems, I mean, what are we, 45 minutes in? Damn, time flies. But it's like a bullish day. I actually think it's decidedly bullish. It's not like one of those days where, I mean, I didn't look at the S&P 500 or anything like that. Like Russell 2000 was up to. S&P that's a new high. It's a new high. Oh Jesus, it's a new rebound high. Yeah, this is a bullish. Like, it's not just those couple names that are going up. You know, Fang and so forth. It's the ones that I deal in. The ones that I'm dealing in are up, like commodities and stuff. And interesting. Russell 2000 stuff, value stuff. Good to know. And now we have, like, my thinking is this, and when I was kind of putting this together, is that now we have a backdrop, you know, and I don't want to do this every day. Hell, the stream's only 3 times a week for now. Let me know your thoughts on that, but you don't need to do it. You just need a little bit of a backdrop. That's why I like to use the weekly charts too. They say, like, whatever your time frame is, that's the type of time frame you want to use on the charts. But if you just get a feel for it, what's the feel around the market? Let me turn. I disable that. Turn that off. Oh, I don't even know if that was showing up on the screen like that. Sorry about that. Got flux. Flux. But now we get like the backdrop, and when we're making decisions about stocks and stuff. So if I were analyzing the stuff, this is it. I mean, I do read the news. I didn't get to all the stuff today, and I do want to make the news part of this too. It's like, all right, let's just read the stuff. Take 5 minutes. Take 10 minutes. See the headlines. That's the way if I can streamline that process. You see me opening up these websites. I don't know. But if you just look at the charts, that's the thing. I find that the charts are kind of helpful for this shit. I'm testing it, but it's a quick way. It's potentially a quick way to get a feel for everything. So now I got a little bit of a backdrop. It's good to remind myself of some of this stuff. What is the, can I just check? What is the NASDAQ? What's that NASDAQ 100 doing? Damn. Same thing. They group. This is like with you got Bitcoin crushing it, blockchain, NASDAQ. Same thing with some people upset about it. I don't know. I'm not upset about it. It looks bullish to me. Some of those now, I think I mentioned that, like $2 trillion on Apple. Some of them, like, whoa, okay. So they're still up. It's not like there's people who are rotating out of it necessarily. I don't really feel like getting into currencies right now or bonds. I check this stuff. I check that stuff more. I mean, I will check this stuff. Maybe it's a weekly thing or a monthly thing. I'm trying to get in the feel for what this is on a regular basis. But like in March, I was checking this stuff. I didn't have this built out totally, but I was checking that stuff. Be like, what the hell? What's going up? What's going down? Are even bonds losing their shit? And they were. And what didn't like the U.S. dollar, like that didn't it like sold off? And like there was one crazy like this week. Look at this. It was at 10. It was here. Then it was way up and then way down. Like, this is the U.S. dollar. That's how you know shit's going down. And I saw this going too. I'm like, what? Even the market didn't know what to do with the dollar. That's saying something. I don't know what it's saying. It's saying something. And it's saying pay attention. That's what it's saying, you know? That's why I read that. That's what I'm reading. I do. So you get a good proxy for if you want to take a guess at what commodities doing. You look at what the U.S. dollar doing. This is a good indicator for. It's like if the U.S. dollar is performing well, then like emerging markets and like and I mean, inflationary assets, they tend to perform poorly. Like this, they're kind of like they go hand in hand. And we could have guessed that the U.S. dollar's been down the past month based on commodity performance. That's just how it works. Based on gold's performance, same shit. You don't not I don't care about the precision. I have no idea. But roughly speaking, this is they're all telling the same story, and the story is kind of, well, we just talked about it. Just like with the company, you're trying to piece the narrative together. I don't want to get too much into macro stuff. I'm just like, got into this Monday. I'm just kind of doing it today, trying to get a feel for this stuff. Not much emerging market action today, which I find interesting. Russia's up, right? Oil. They have a lot of energy exposure. Mexico up. Turkey. All right, that's good. Now I just want to check the portfolio. So this is the thing. I mentioned this the other day. So we do Monday, Wednesday, Friday. Like, what the hell? What did the portfolio do yesterday? This is great. I get to see it. I saw it Monday. I see it today. But what did it do yesterday? If I had more data, I could just pop it in here and look. Maybe can I do that? I might be able to do that. I could probably get these spreadsheets to do that. Just get yesterday's price. That way, anyway, it's not too important. Camping World up another 8% today. Oh, jeez. I still have a good chunk of it. You saw it. This is the thing. So I'm a value investor, right? This is another change. I'm continually developing. I'm the me of 5 years from now is going to look back at me right now and be like, what are you doing? What were you doing? I mean, I get it. This is how you learn. But the stock price has gone up 5x. You should sell out. Nah, man, the trend is looking terrific. It was already cheap even before all this happened. There was insider buy. I mentioned this before. Abrams was getting involved. The CEO was buying. The fundamentals looked interesting. Wasn't so much playing that it was a COVID play. I wasn't thinking that. I mean, I was bullish on it before all this happened, and but then it was up so much, right? You might think, I did start trimming in those low 20s. I thought it was so quick, maybe it's going to flatline here a bit. But I'm like, I still got to keep a heavy position in this because this is so bullish, and because I still thought it looked a little bit cheap. Not super cheap in the 20s, but cheap. Like, I think it could be worth $40-$60. It's a broad range, right? But who cares when it's trading at $4? You know what I mean? This is a perk of being a value investor. Who cares about what exactly it's worth as long as it's heavily discounted? Terrific. Then when it starts rising, then you'll be like, I don't quite know what the discount is. But then even when it gets fairly valued, it still might keep running. That's why technical analysis, I think, can help with that. And it's been super helpful for me so far. I got to say, these past couple months, I've been keeping my eye on stuff, looking at the charts, and it didn't have to work out this way. But as it turned out, it was kind of the market action kind of aligned with what the charts were saying. So just another test that in this case did validate something I was thinking. But here we are now. It has nearly, what is it? It's up another 50% from there. So I feel fortunate that I kept it as big of a position as I did. What was it? It's still, I did it again. It's still 1.5%. That's a good sized chunk of the portfolio. And this is good. Okay, another 8% today. Even the other Monday we were talking about, I'm like, all right, time to start trimming again. I didn't, but now $42. Michael's, damn, another 5%. All right, so we're gonna see what we can expect. We're gonna see some energy names up here today. We're gonna see all the stuff that some value names are gonna be up today. General value names, which should be a lot of this portfolio. Holy shit! What happened to this one? All right, we'll get to that. That was I probably should have sold out of that one already. So I'll get to that one in a sec. But we're probably going to see a lot of green today because if all that stuff that was up today is representative, or not representative, but that's the type of stuff I hold, as I was saying. So as I scroll down, just taking a quick look, a lot of green in the portfolio today. Cool. Sorry. Scrolling across. That annoys me, so I don't know. I'm sure it could bother you. Let me just move it back. Wish I could lock it right there. Okay, so now let's check. Camping World is probably not much news. I should have. I wish is Seeking Alpha all the way over here. I want it closer. I gotta move. I want that hyperlink to be closer. Any news today? Oh, it's earnings season, right? There's gonna be a lot of people reporting. So there you go. So that explains that one. Another beat. So this is the type of we read RFP news release the other day, and I probably would read this press release. Just a quick. I don't like reading it on Seeking Alpha. I wish their formatting was cleaner. Revenue increased 9%. They got an outlook here. I'll read the quotes. Sorry. Yeah. I'm just gonna read the quotes real quick. So 9% revenue increase. Look at that. During the pandemic. Is this year over year? I don't like reading it on Seeking Alphas. So watch this. I'll do this. Check this. Sick. So lazy. I don't want to type. Just save me. Let me zoom in a little bit. Oh, I'm kind of blocking stuff there for you. All right, I'll try to find this. So I can do this too. Check this. Oh, I'm chopped off. All right. Now we can at least read it together, you know? Yeah, so you see, I like to see stuff like this, like the America's largest retailer of RVs, right? Because then you know it's at least a legitimate company. And then it's kind of effectively just a play on RVs, which in turn is a play to a degree on consumers' discretionary income. But in this unique environment, this was the thing. So it was a unique COVID play because I actually don't even know. Did it turn out to be? Is it benefiting from the environment? Well, the revenues are up 90%. Let's just read. Tuning condition over the past 20 months made significant enhancements, which allowed us to quickly pivot and handle the surge in web traffic. Excuse me. Second quarter, okay, revenue increased 9% to 1.6 to 1.6 billion. That's a big company for me. Gross profit increased 19%. In gross margin, gross margin increased 260 basis points. That's legit. I love to see. I keep my eye on gross margin. I think I mentioned that in a number of videos because cost management is important, and this is relevant to GameStop too, because if you take a peek at GameStop, if you look at GameStop's fundamentals, do I still have it? I might still have it open. Yes. Check out gross margin here. So look at gross margin. Okay, so this I have. Usually this is just 3-year average usually that I'm looking at. Just because I don't usually need to know each individual year. It gets to be data overload. I don't care. I just need to know the fundamental trend and how things are looking. But in GameStop, when I'm dialed into a company, and I do it for a handful of companies every year or two, something looks really interesting to me, and that's when I'm building a big position. GameStop is one of those examples. Then I'm picking apart the numbers to make sure I'm not being fooled or I'm not making a mistake. Sometimes I still do, but I need to make sure that I'm not I don't want a position to mess up because I messed up. If it doesn't work out in my favor, that's okay. That's how things work. I mean, that's how the market works. That's how these types of things work. So sometimes the odds just don't work out in your favor, and that could be the case with a position that I'm very dialed into. But I just don't want it to be because I missed a number or something like that, or I misinterpreted the data. Like that's inexcusable for me in my current state. Like I'm not going to be wrong because I miss some blah, blah, blah. That's why I read so much when I'm dialed into a company, about the company. So let me go look at annual gross margin. So now over here, I should clean. Yes, I apologize for this conditional formatting. I made all these multiple fundamental spreadsheets and I didn't clean up the formatting for this side of it. Honestly, I forgot. You can see all these damn spreadsheets. I couldn't keep up. With my own stuff. And so this kind of looks like shit. It bothers me because I want clean. I rely heavily on conditional formatting for a quick analysis of the company. Now it's a pain in my ass. Anyway, at least I can see the data. So we got gross margin. This is rolling 12 months, if you recall. It's not through Q2 yet because, of course, that data hasn't been released. We should get it mid-September. But gross margin, look at this. Gross margin is 29% this year. Higher than 2019, higher than 2018. Revenues have fallen off a cliff. What are they, down 25% roughly? And gross margin up. That's good. You know what I mean? You don't base a thesis on that shit, but and this kind of speaks to the management to a degree. I think I said this in my game. Oh, did anyone see the GameStop video? I hope you liked that. I talked about it on Monday. I said I was going to work on it after the stream, and I did, and I finished it up that night, and I got it uploaded. And then of course GameStop popped. Was it popped yesterday? Right? It was like popped the damn. I feel like I uploaded it just in time. Not that it's sticking or anything. It's up such a small amount. It's almost irrelevant. It's noise. But anyway, in that video I talk about how you're trying to get a feel for if management's doing a good job in addition to what they're saying and capital allocation decisions and stuff. And then they're talking about reining in costs, de-densifying their stores and improving working capital management and so forth. But just look at something as simple as how are they managing cost of goods sold? How are they managing the cost of the shit that they're selling? And despite that huge sell-off in revenues, gross margin was up year over year. It's up since 2018, which was a big $8 billion in revenues. So if it was falling off of a cliff, I'd have quite a bit less conviction in GameStop, because I think, number one, the value, the quality of their assets is worse than I anticipated, and demand's falling off a cliff, and because people, they have to sell it for less and blah blah blah. But that they got it up, it speaks that it may be higher quality assets than some people are thinking, and that management is not totally messing shit up right now. And so to see Camping World, to see it up 260 basis points off the top of my head, I don't know how good that is for Camping World. I'm not dialed into Camping World at this point as I am for GameStop. But to see it go up 260 basis points, terrific. But I guess that shouldn't be too surprising given how the stock prices perform. But also, if they're crushing it, then gross margin is naturally going to rise. I'm going to go off on these tangents like this. SG&A went down. Oh, right. Maybe people working from home. And okay, now I just kind of want to get to the so I'm not going to open the presentation. I'll open the presentation for some stuff, like the Restore GameStop presentation, or if I'm starting to get a feel. So that's the thing. Especially if you're trying to build a heavy position, you got to find as much as you can about a company. I mean, Seeking Alpha. That's why Seeking Alpha is good. Seeking Alpha is great for getting you started on a position, because usually there's people who have written about stuff in the past. And even if it's like 3 years old, you may go, oh, that's 3 years old. But that's okay, because they'll talk about a little bit of background on the company, where it was back then, if something was unique about it. And then you can take it forward and then like read the press releases since then, or read any number of things. But Seeking Alpha is a good start. There any presentations they have, the latest presentations they have, sometimes it can be useful to look back a couple of years on past presentations. I don't do that much. I know people are all about how a company has evolved over the years, but it doesn't matter that it matters, but I don't know, whatever. I'm not going to open. No quotes? Isn't there an Outlook or something? Not in the press release? What's up with that? I don't feel like reading the conference. So I'll read the conference call. I'm not going to read the conference call for Camping World, but that's another. You've got to read the conference call, see what management's saying, what their sentiment is, how they respond to questions, that type of stuff. Oh, I didn't go all the way down. My bad. Oh, what was up so much out of curiosity? Look at this. Damn. Oh, wait. Oh, new vehicles. Yeah. And used vehicles. Just the vehicles. Obviously, that's their main thing, right? You're going to expect it to be that. Okay, let me keep going. There might be quotes down here. I just want to see what they say. I mean, there's only so many things you can say, and they choose their words carefully. And I guess I didn't appreciate that years ago. I'd be like, okay, what does it matter what they say? And then other people really hang their hats on their quotes and stuff, and I kind of get it now. Oh, maybe that's it. No quote. Nah, bummer. Okay, no big deal. That's a bullish fundamental trend, right? It's just like you can kind of get I think I said this in one of the videos too. You can kind of guess what the chart looks like based on how the fundamentals are unfolding. You see GameStop falling off a cliff, the year-over-year declines in revenue, saying, all right, I bet I can guess what that stock price is doing. Same thing here. You see what the stock price is doing, you can get a feel for what the fundamentals are doing. That's another. This isn't a stream about technical analysis, but I get excited about it because I feel like I missed years of not using it too much, just as a quick tool, not for making what I would say are the big gains. The big gains are fundamental focused stuff. Even Camping World, it was the fundamentals that got my attention. I was like, oh, this is great. And then the charts kind of supported it. And then when everything's going hand in hand, then look out. Look at Camping World. Of course, it looked terrible before it got better. And then, all right. All right, so that I just want to check that 8% because is it in my? I'm going to add it to the cell. Is it? It should already. Is it not there? Boom. Oh, it is there. Okay, good. Okay. What I'd like to do too. I don't know if we'll have time. All right, 8 o'clock. We'll see. We'll see. I kind of got a list. So, let me flip back. Sorry, I forgot I was over there. I kind of got a list. I didn't know what I was doing on Monday. I still don't know what I'm doing right now. But I got a list of like things that I could go through if I have time. I just wherever the spreadsheets take me. But I'd like to go through the charts for the Roaring Kitty portfolio, maybe the charts for the buy list and the sell list. Oh, you know what I definitely want to do today is I want to go through Open Insider. I'm checking that every day. I might not check the news every day. I might not check the market every day or the position every day, but I'm checking Open Insider every day. Yeah, I'm big on insider trading. All right, but let me just quickly, before I do that, I at least need to stay on one path just for once during this stream. Just stay on path. Just stay on point. Penn National Gaming, that's gonna look bullish. All right, I want to pull it up because that was I got down to 4. I didn't quite get this. It was only 2 days, and I was buying so much other stuff. Maybe I did. I don't think I did. I think I missed it on Penn. A lot of uncertainty on I wasn't too dialed into it. I know there was just that big acquisition, and then I think it was levered too. I'm like, is it gonna survive? I didn't know enough about it. But then when it got up to, it was the 23rd. It was the 23rd. That was when I right here, $9. Oh, did I only get it once? I won't. I thought it was. Did I buy back there? I forget. Regardless, it wasn't a huge position, but one of the biggest winners. So too bad. I wish I bought more. Michaels, I wish I bought more. Just as a nominal position, that much I do remember. Both of the. Oh, you can see them. Oh, Michaels is in a nominal position. Oh, you know what? So sometimes what I'll do. Michaels is so Penn nominal position 0.03%. I probably just got a couple shares. Sometimes I'll Penn National Gaming, I didn't count. I definitely missed like the last $10. I don't think have I sold any? I don't think I sold any in the 30s, which was a bummer. Oh no, I might have. When is this, man? Oh, I almost certainly did. Low 30s. I probably was selling here, and then I sold the balance. I'm definitely not capturing any of this, but I'll keep around like 5. I'll keep around just a few shares at the end, just to keep track of it. Because remember how I said I sold out of some positions and they may not be reflected here when I sort by percent from 52-week low. That sucks. And obviously that's a stupid reason to keep a stock in the portfolio. But tracking is so important to what I do that there's a case to be made that it is worth my time here. So I think I did sell out of some positions though. Like I definitely sold a lot of TLRD, which has turned out to be the right decision, right? Because they filed for bankruptcy. So like some things I'm like, this company's not going to make it, and I sold out. But there's not that many. I definitely kept most positions still in here. Anyway, Michaels is an example of a company that I was tracking for the past year or so. I thought it was quite leveraged though. They had a lot of leverage, but legitimate cash flow. And if you know the business model, they're selling like crafts and supplies and stuff. Not a bad business, because I'm just spitballing here, but I can envision people wanting to buy that stuff in a store. I mean, I bought that stuff before have I bought it since would you buy it from Amazon? I don't know. It doesn't matter. But I thought, kind of an interesting business model. There's some competition, but not a crazy amount. Brick and mortar anyway. Of course, there's online stuff, but people might prefer to see that stuff. Anyway, that's just stuff that was going through my mind. But it was super leveraged. And there was a couple of retailers out there like that had a history of generating quite a bit of free cash flow. But like GameStop was another one. History of generating free cash flow, but its risks were secular risks related to the business model. Michael's also brick and mortar secular risks, right? I mean, if people are just going to start buying their stuff online, then that's going to be trouble for a company like Michael's. But also a ton of debt. So much debt that I'm like, I didn't think. I'm like, what it was trading like $5-6. I'm like, I don't know. But then when it traded down here. And then I must have in my head being like, I must in my head be like, you know what? Let me pull up the bonds too. If you remember from Monday, I'm always checking the bonds. It's a terrific short. If you don't check the bond prices, add it to your list of things you got to do. This is FINRA Markets, Morningstar.com. You have to. Not all of them are publicly traded and available to see here. Would it be? Sometimes you start with ticker. Oh, okay, they are there. Okay, so let's see how low this got. Did this throw me off? 2027. Check the maturity. You want to see that. Because the further out they are, the riskier they are, so you'd expect those to trade even lower. They got some, and they also have, think back to March and April, or think back to early 2020, whatever. They had some come and due in 2020. I think you'd have to follow up. Sometimes there's still stuff listed here that's not even still relevant. But it appears from this anyway that they had some debt come and due. But let me see 2027. Let's check this. Oh, it didn't get that low. Oh, man. I'm going to add this to my short list of ones that pain me. I had known that in my head, but let me make a list. it's good to take notes on this stuff too. I've been trying to be better about that. As you can see, I try to track so much stuff that I lose track of everything. So I try to take more notes. But if when you're doing the work, you're really dialed into it, you tend to retain a lot of stuff too. That's why it's so important to actually do stuff, not just read about stuff, but to take action. You pay much more attention when you actually pull the trigger on something, when you actually lose money. It hurts financially, but it hurts, like, especially when you're really dialed into something that works against you. Like, you're pissed about it, right? Like, what did I get wrong? What did I miss? And especially now, I feel I kind of a little bit frustrated. There's like 5 positions, and now this is one of them that I would call in March and April. This is the thing, and I think I said this in the other stream that I'm just so diversified. I was dealing in so many stocks. I don't hold it against myself too much. It's fine. It's no big deal. I missed Michael's. I got a 5-bagger on something else, but maybe I only got a 2-bagger on something else instead of Michael's. That's the thing. I had so many stocks that it's perfectly fine. There's great reasons in my own head as to why I may have missed something. It's not a big deal. It's more educational. It's like, what was it that I thought at the time? What was I thinking at that time that threw me for a loop? And if you have diligent notes, or if you don't, I was gonna do that in the stream. Or what's that program called? Evernote or something where we take the notes. Should I do that right now? All right, I'll make a note to myself. Maybe I should do that. Yeah, that's a good idea. I had downloaded, I think it's called Evernote, and I was gonna take the notes right here on screen, right? I mean, you see me taking a note on a notebook. I like to have the notebook, but I seem like it would be better if it's up on the screen. So I think I'll do that. I'll try to do that for the next stream. So we'll make a note right on the screen. But what I would say here is that I was tracking Michael's even before all this happened. I did know they were generating legitimate free cash flow. Yeah, and I keep talking about it, but let me just heavily leveraged, and some other things too that it's been a while since I looked at it. And so I didn't totally miss it, right? I mean, it's in the damn portfolio. So I realized. So this is what I'm getting at here. Is it going to come up while I'm talking? That'd be nice. Let's see how long this takes while I'm talking. I tried to speed this damn spreadsheet up. Any chance it can happen quickly? Oh, that's not bad. Yes, that's not bad. What's that? 15 seconds? 20 seconds? 30 seconds. Definitely faster than 30 seconds. That's great. This is why I added the checkboxes, because I want to check it when I'm looking in the tracker spreadsheet. I don't want to have to open up the other spreadsheet, type it in, wait 30 seconds, wait a minute, probably what it used to be. But even if I have to type in the ticker, that's not too bad. And so look at it. So legitimate. So I'd say it was kind of similar to GameStop in this regard. This is a sizable retailer, $5 billion in revenues, and in fairly surprisingly stable. It was kind of fallen off, but not much. This is fairly stable in my view. Gross margin was kind of tailing off. Look at this gross margin trend. I need to clean this up. What is going on here? Let me see gross margin again. So this was that's a little concerning, right? From 40% in 2018 down to 35% as compared to GameStop, which was up, right? And this is the thing, everything's relative, right? There's no this stock is that's a thing. But when you're trying to manage the portfolio, it's all about relativity, where is this position cheaper on a risk-adjusted basis, as they say, than some other stock in the portfolio. And I remember thinking, because they were a little bit similar to GameStop, is that no, I'd rather have GameStop in the portfolio than this. And I mean, there's a case to be made that should have been better dialed into Michael's, because it fell down. So of course GameStop didn't go down as low on the downside, but now it's bounced back so hard that if I had I don't know, whatever, just something I was looking at. The gross margin probably got my attention, and then the negative tangible. Look at this. It's got negative tangible book value. This is where it starts to get tough. Look at these levered figures, and then when you adjust using that calculator that I have. For those who maybe know, this is just a quick calculator on the top right over there. Hey, check this. Oh, watch this. I got a button here that. Oh, did it? Oh, did it? Oh, I have a thing that I can highlight what's on the screen. It looks like it might have. I downloaded it, but it looks like it's not up on the top of my screen. All right, I got to look into that. Screen highlighter, whatever it is. But this top right, it adjusts the shares based on the amount of debt outstanding. Because it says this company's so levered that it's probably it might have to issue, It might have to dilute the shareholder. So let's just do it now. And then what's the book like? What's the book value look like then? What does the free cash flow per share look like then with this new adjusted share count? And when a company's super levered, like Michael's was, it didn't make me comfortable using the prevailing share count, unlike GameStop, which it was far less levered than it appeared. So this is probably far less levered than it appeared too because of leases. A lot of the brick and mortar, the data in my spreadsheets is screwy because it's classified as debt. It sucks. And so it's not this levered as it appears. Anyway, if we look at the cash flow down here, at least on an unadjusted basis, it was generated simple free cash flow, operating cash flow less capex, just as a simple estimate, a proxy for what bona fide free cash flow is. You're looking at $2 per share. $2 per share in the 12 months ending May 20th. $2 per share, and the price point was, I mean, now it's $8. $2 per share on an $8 share price, so it's 4 times free cash flow, 25% free cash flow. Yeah, but it was less than 1 in March, because I think I saw it was trading below 2, right? God. Oof. But it was so levered that I'm like, well, that's great. It looks cheap, right? This is why you always need to dig into the stuff, and you can't just go on metric, blah blah blah. And so when I adjusted, I'm like, it doesn't look as appealing when you kind of adjust for the debt, and it just. It's like still appealing, but it's much riskier. It's a much riskier play because of that debt, because it could have. I'm kind of surprised it bounced back. I remember thinking too, this was in March, like I don't know if they got to close their stores, and it was so important that the stores be open, right? I don't even know. Maybe they do have a solid online presence. I'm actually not sure. But and then when I thought, all right, they could be in trouble, but solid free cash flow, good sized company. No one was any insider buying. This is going to piss me off if insiders are buying. Then this is okay. At least that no insiders are buying. And then who owns it? I think some PE firms are involved. Well, Wisdom, good website for checking ownership. Just a quick check on ownership. Oh, we're gonna get new holdings next week for Bain. I did know Bain. They own like 35%, and then I had questions too. I don't know who owns the debt, but if Bain owns the debt too, then date last reported. Yeah, so Bain owns a good chunk of it. On the one hand, I don't know. That could be a good thing because Bain doesn't want it to go bankrupt, right? And they own 35%. Damn, that's actually a good chunk. That could have been a risk mitigator for me. A company can still go bankrupt in this situation. It's not to say that that company can't go bankrupt. See what I mean? There's other ways to adjust for risk, and if you know who owns the company, and who owns a big chunk, and then there's clearly a backstory here with Michael's, which I had read about back in the day. But if a PE firm owns 35%, either they took you public, or if I do this is where Seeking Alpha would be helpful, because someone has certainly written a report on this. This is a pretty classic value stock. Calling it undervalued in June, but that was in June. January, I probably read that one. Oh, I probably read Vince Martin's. Was there one in? Sorry, I'm just want to check. I probably read Vince's. October, maybe. Did someone else talk about Michael's too, outside of Seeking Alpha? Josh Arnold. I'm not going to read it now, but can I do it quickly? Did some see if there's a super thorough thesis, not that if you're writing a report it should be super thorough, but if it's super thorough, they're going to mention a little bit of background on the stock, like why the firm's involved with it. All right, you know what I could just do? Bain. Okay, Bain's not there. Bain. Okay, no Bain. How do you not mention Bain? How do you not mention Bain in a report? That's what's a little bit surprising. Okay. All right, so here's the other thing. Okay, so the bonds, these are bonds from 2027, so those are pretty far out. Those are that's far out. It's not 20 years, it's not 100 years like some people talk about issuing bonds for. But 7 years out for a company like this, heavily levered, brick and mortar, that's the distant future. And its bonds, this is it. The bonds only got down to 60. That's not that cheap. Like I would have thought that. And they probably figured this is the thing with a company that's generating a ton of free cash flow, and it looks like maybe it'll stick around. The bonds are probably safe. That's what I mean. It's not always hand in hand where if the company's going bankrupt that the bonds are going to trade in the 20s. It depends on where they are in the totem pole and so forth. There's a lot of other factors at play. This is just a quick rule of thumb. And for these are probably the most senior. I don't know if they have other debt too. Probably the most senior debt that they have, and they probably would have been fine. That's why it never got into the 20s. So that's just something to bear in mind, that the seniority of the debt matters. Nevertheless, as a quick rule of thumb, only trading into the 60s, that's indicative to me that it probably isn't going bankrupt. I mean, that's a sign of distress, 60s, don't get me wrong, but for someone like me, I'm not concerned with 60s. I see 60s, I'm excited because I think stock price is probably sold off. People are getting nervous, and I step in and I'll take the risk because a good chunk of them don't go bankrupt and they go 3x, 4x, 5x. It covers your losers. That's how it works. It's as simple as that. So for whatever reason, I didn't go heavy into Michael's because I was buying other stuff, and I thought so much debt. I had plenty of other retailers too. I didn't need more retail exposure. And then I changed my mind. I don't know when. I don't remember off the top of my head when I changed my mind, but I probably changed my mind. I want to say it was right around May. This because I probably wouldn't be. This happened so quickly. I doubt I was. I don't like to buy on the uptrends. It makes me. You can, but it pisses me off, so I might wait for a pullback. But I bet I bought right here, and I thought, damn, I messed up. I probably did what I'm doing right now. Checked out the bonds, read up on the story if there was a Seeking Alpha. Oh, this was before the June article. But probably reassessed the story and was like, all right, I made a mistake. And maybe I sold out some other positions, and then I bought back in. It's okay not to buy at the bottom, right? No problem. And I bought back in, and now it's a 0.4 position. Not a huge position, but that was I distinctly remember being, damn, I made a mistake. It still looks cheap. If they're not going bankrupt, they're probably still cheap. It probably could be at least a double, triple, four bagger maybe, but still a lot of risk. But if I didn't buy it, it was because of bankruptcy risk. And then when I looked at how it was unfolding and took another sober look at the data, I thought this setup looks good, and bought it. So, all right, that's good to know. There was a couple other companies like that. I mentioned them last time too, but cool. And that was up 5% today. Did they report? It doesn't matter. I don't really. I'm less concerned with that one. Such a small, but just curious. No. Agile Therapeutics. Okay. Owens and my. Excuse me. So what happened? Okay. I mean, that was up big. Now it's giving back some of its losses, but this one still looks kind of interesting. It's no longer super cheap, but okay. Let me. They just reported, didn't they? That was why it skyrocketed. You know someone who's invested in this is Vince Martin's got an article on that, but Bloom on Seeking Alpha. He's a good author too. I think he said he was a credit analyst, and his reports, solid reports. I think he was bullish on it. Let's see if he commented. Jeremy, no, really, no, okay. Sorry, I'm scrolling so quickly. They did look like a sign of risk at bank history, but I don't want to read this article right now. I just checking real quick because was that the most recent article that I saw? And just wanted to see. Okay, so there's a presentation. What was the report? So I'll look in. I don't feel like doing it now. I can only look at earnings releases so long. I'm trying to just refamiliarize myself with the top positions of my company in this in the portfolio. I'm not reading the press. I don't want to read the conference call. All right, I'll check this later. This I want to keep moving through the list, but I'll keep this as something I want to check out because what is it in the portfolio now? Oh, it's almost 1%. Take a peek at that. STKL down 8%. That's kind of been bouncing around. What is that? So Vapo. This was one of my cold. I think it was like first 2 weeks, either last week in March. I think it was last week in March, first week in April. I'm like, all right, I'm how to play this market environment. I was late. I should have been thinking about this in February and stuff. And but I'm like, then where everyone's working from home, and there's quarantines, and no one's going out. How to play that? And then I think what was it? Let me just Yeah, respiratory. What are the? Yeah, I think I should know the name of it. Oh, they're in New Hampshire. They make a product that I felt that people would be using. Geez, what's the name of the product? Oh, this is embarrassing. What is it? It's a ventilation system, but is there something? I thought there was something else. It was like a ventilation type system. But I was like, all right, how to play this? What's one way to play this? And looking for things where I wasn't so much looking at healthcare per se, but then I found something that actually made or a type of one of these things that could be used to treat people with coronavirus. Jesus, who are the products? And it went up hugely. I don't even come across it because I think I filtered. I think I was doing a screen and I filtered by like healthcare and looked for smaller companies and just started going through one by one. Oh, is it a Canadian company too? Nope. I don't remember. Anyway, it went up. It went up a ton. Yeah, I got it around right. So it hit, I bought it around just under 20, right around here. So I was like, oh, I already missed the run up, and I'm like, oh, this could keep on. So oof, oh, that's a big sell off. Oh, guess I should have sold out before then. It's not a big position, but 0.4%. Well, I don't even need to check the news. It was a speculative play. That's the thing. Why would I keep holding it? Because I guess it could keep running. But yeah, it might have been a 5.6% play. I'll have to look into that. Probably just sell it. Some of these plays, it's like, well, I'm not in it for 3-5 years, but I got to be more on the ball with getting out of it. That's a big fall. Can I click this for the news? Don't you want to see 40% drop? Aren't you curious? $200 increase year over year. Jeez. I guessed right on that, but that's what I mean. If it's already priced in or if it went above and beyond, right? I mean, that's how these things happen. That's how you can know what the performance is. Doesn't mean you know how the stock price is going to react. High velocity there first. I think that was it. Just caught me like it helps people battling respiratory issues. And I thought, all right, yeah, maybe. Could be something here. And then where it's just sentiment kind of takes over. I had been tracking APT for a long time too. They make the face masks or a bunch of stuff. I was tracking it this whole time, and then I didn't buy in January. But if I was on the ball with stuff, I'm like, how can I play this? I'd like to be better about that stuff. I know other people are, but as an individual investor, it gets tough to stay on the ball. Those types of things in the news and how it's all unfolding. Oh, look at this. APT's falling off, but still, this is. It was a 10-bagger. It was a 10-bagger in like. It's such a short period of time. You know what I mean? So then I'm like, could other stuff do this too? That's what I was thinking. This probably caught my attention too. And I'm like, could other stuff do this too? Especially if there's an actual fundamental change in people's demand for these types of things. And so that was my thinking there. But yeah, 40% drop. Damn, too bad. I should be. Maybe I probably have already begun trimming out of it, but that it's still 0.4%. I should have trimmed out more at $50. I don't have much conviction. I don't have much conviction in a stock like that at this point. I don't know. Those are the ones that can still go up to another 2x. I don't know much about it. For all I know, it's revolutionary. I'm not an expert in the medical field. Medical devices. Pump. Oh, yeah, I want to see this chart. Okay. Up with oil. This is a big position. Also, someone got involved with it. What are their names? They're big energy guys. It was SCC, Pump. I think I can just they got involved after this one, 13G. Wilkes. They're involved with some energy. I've crossed paths with them before. They bought just under 10%, and I was getting involved right Well, I already had a position. I already had a good sized position right here. When it fell, I always thought it looked compelling to me. I wanted to buy it. They had a yeah. Taking a drink so I can think. They energy firm. Actually, who was it? Pioneer PXD has an investment in them. I think they were spun off from PXD. Is that what it was? Something like that. But it was a very not that leverage of energy player, deceivingly leveraged because I think it had leverage, but it had the cash balance that would like cover it, so it wasn't that leveraged. So it didn't make sense to me that it was anyway. It looked attractive right here, but I never bought it because it was too expensive. I thought it may be worth $15-20, and then it sold off here, and then it sold off here, and I'm like, oh, now it's starting to look good. And I definitely started to buy here. I'm like, all right, I bought some here, and then this happened, and I legit bought sub two. I bought well below here. Like I almost timed it. I got lucky because I was watching it, and I bought it, and then it came up that day. It looked like the market had messed up. The market very clearly messed up because the stock is undeniably worth much more than $1.50. It was, but everyone was freaking out, and but that was the same day gold collapsed, and a lot of names like that morning things like fell apart. And pump was one of them where this was the market messed up, and in my opinion, because the stocks are like almost objectively certainly worth way more than that and not going bankrupt or anything like that. I didn't think they were battling liquidity issues with their cash position and stuff, and so it was the super cheap, and then it continued to fall down. I bought some more, and now it's a big chunk of the portfolio. Partly because it's already doubled. I bought most of it right here, I should say. Maybe I've had it. And now it's I think it's worth 10-15. So does Wilkes. When Wilkes bought April 3rd. Or he filed it April 3rd, right? All right, it's 10% position. He may have been buying. Maybe he bought it. Maybe he owned some before then too. I'm not so sure. But Wilkes, they are people. This is a thing. They're energy folks. It doesn't mean that they're right, but if they're taking that large of a stake in a company, they're making a move. They're like, all right, there's something off here, and that validated my belief that it's way overdone. I actually still think it looks cheap right now. This is why it's still a big chunk of the portfolio, because unlike Camping World, which I think is getting, I don't want to say overvalued, and even if it's fairly valued, I'm still okay holding some. It's not really concerning to me. That trend, like I said, fundamentals look good, technicals look good. I'll keep holding. I don't mind. And if it works out against me, that's okay. Learning opportunity. But in the case of Pump, I actually think if energy is turning around, I mean, I still have this heavy energy exposure. I expect Pump to be a winner on that front if this is happening. And I also think the downside is limited. I think this was a mess up right here. And yeah, if everything sells off, it will too. But I still like it. So, so he just under 10%. No, he didn't file since. So that would. Did they ever file a new 10Q? Oh, they did. Oh, I was waiting on that. So this was the other thing. This is a big reason it sold off. They didn't have updated financial statements, and that scares people off. It scares institutions off. There were some issues, and nothing I felt was too concerning as to why they needed to. There was the former founder or manager, CEO or whatever did some weird stuff, and they had to investigate, and they didn't have updated financial statements. So it's a silly risk. I think for someone like me, I think I'd love to see something like that. I'm like, oh great, so they haven't filed their updated financial statements. People freaking out about it, or when everything's selling off, they don't want that on their books. They go, get rid of that. We don't even know what their books look like. But they were saying in their press releases, they were given a handful of data points and be like, our cash position is $600 million. Our total debt is $400 million. Like the few data points they were giving you could piece together like, what? Excuse me. You have enough cash to cover your debt? Okay. Oh, so you have enough cash to cover your debt, and you have fairly higher quality assets and a history of profitability and trading below book value. Can I pull it up real quick? I didn't just type it somewhere, did I? Oh, I might have. Let me do this. And so when those few data points, I'm like, all right, so you piece the narrative is very simple. If you can piece together, it's all about piecing together. What's the narrative? Why is this thing selling off? And is there something that may have screwed the market up? And in this case, energy was selling off. and the market was selling off. It's a smaller company. Like you can summarize. This is what I was trying to do in that GameStop video, and I want to do it with additional videos. But you can summarize the thesis in like 5 bullet points. This is why it sold off, and this is why I could turn around. Like the thesis for Pump was so simple, and it's still so simple. Look at it. It was trading $1.50 with $9 per share in book value, pretty decent book value, I felt, and no outstanding net coming overhang. I was like, what? It made $2 billion in revenues, an EPS of $1 trailing 12 months through March 31st. But people were concerned because they didn't have those updated financial statements. It's just one more thing. So anyway, I'm going off on a tangent there. But now as I'm rechecking a Pump, I haven't looked in a while, but it's a big position. I should be more up to date with it. Market cap is 600. Like I understood why it sold off, and I thought, oh, this is great. Pump is my type of stock. Those are the types of risks I like to see. And I remember thinking at the time it dropped down to $1.50. I think $1.50 was the low. Oh, wow. It briefly took that. I remember being like, I thought I caught the low. I thought I caught the true low this day, March 16th. And I thought that was it. And then it came down, and then it went down again this day. I thought, I missed it because it took out the 150. And, but then it bounced right back. But I thought this is going to be a 10 bagger. I thought this is going to be a 10 bagger too that day, that it's going to rise to 15. Let's see if it does. I thought it was worth 10.15. And if energy comes back in a big way, like if you see the dollar heading south and gold's getting bid up and even oil was up today, if that happens, I mean, Pump could be it could reach previous high. I mean, it was at $24 in April of last year. I say it's worth 10.15. I try to be super conservative with my valuations. Upside will take care of itself, and. So it could be a 20 bagger. It could be a 15 bagger. So that's what I mean. Like, that was a great opportunity, and now I'm like, should I own more of it? I'd love to buy more on a pullback, maybe. Wilkes didn't sell, but it's been pretty stable. You know what I mean? I haven't been given much of an opportunity, and I kind of like where the position is right now. And I have so much energy exposure; it's hard to justify buying more. But that's the type of stuff I think about. CDE, that's my top silver play. How is this doing? I should check up on this. It's almost 1% now of the portfolio. Oh, shit. That was a big winner in 2015, 2016, too. Check this. Got down to $1. Yep. It didn't get that low again this time. Huge opportunity in March. Huge. Looks good. Yeah, and if commodities are in a multi-year trend, this is going to keep going. It got up to 16, I think. Well, that was just okay. It got up to 35 in 2011. That was in silver's. Was it $50 an ounce or something? Look at that. Look at this bounce backs. Oh, 2015, 2016 was awesome for folks like me. All right. Do I need a trend? It's kind of like a trend play now. Like, it's a silver and gold trend, and the chart looks okay, and the fundamentals, I'm okay with that. I think I'm okay with that. 2 billion. It's kind of a. Is it overbought or anything like that? I'm okay with it. I'll regret that probably. Plantronics. I'm trying to internalize the price points of these stocks too. I haven't done that in a while. It's important to know where everything's trading at. New Gold. I gotta look back. We gotta look into this story too. I want to do this right now. So New Gold is one of the top positions. 2.8%. All right, let's do that. Oh, first, before we do that, let's just check the insider buying for New Gold. Canadian company. A turnaround. Oh, I have it here. See if the insiders are taking any action. Because if I see, like, oh, they're taking it. Ooh, March. I did see that. See that? They knew. Look at this. March 9th. Through March 20th. They bought, I mean, not a ton. Because there was price below $1. So you see all these shares. It's not like I was 100, 200, just over 200K. About 100K total. It's a small, it's not a small company. But that's something. Nothing recent though, but I don't have updated financial statements, financial data in, because for Canadian companies I can't get it into my spreadsheets. I only have it through year end because they can't collect the quarterly stuff. Share radar. I just want to see the balance sheet. The only thing I'm going to check here is the balance sheet. I don't care about the. I care. I'm not saying it's not important, but that's not my play. The play is gold, and the play is a turnaround. I need to make sure the tenor. Oh, and I want to see if there's any Seeking Alpha article. There were some folks that were keeping tabs on it. Where's the yellow? Let's read the quote, I guess. During the quarter, they were able to refinance, I believe. No, a different company, including the closing of this was it. Yeah, $300 million partnership with Ontario. Not a refinance, but they sold. It was a royalty, right? In an 8% gold stream, in restructuring of our balance sheet for okay. So they were making some capital allocation moves. So this is the thing. So New Gold, second largest position in my portfolio, and I'm nowhere close to being as dialed into it as I am for GameStop. Of course, GameStop's almost 3 times as large. Is that what we were saying? But I'm okay with that. Like it's not like it's if it gets halved, the portfolio is not crushed. But at the same time, if there's enough things going, that's why a thesis can be simple. And in my case, the fundamentals look cheap. The backdrop of gold looked cheap. The turnaround looked like it was taking form. There was some insiders buying, and that's it. That's why if I make some other videos, they cannot be as long as GameStop. I don't have enough to say about it. I want them to be shorter. I could probably do New Gold in 1 minute. Maybe they'll be 2 minutes or 3 minutes. I could probably do them all in like that 3-minute summary like I did. And I feel like that would be helpful because no one's going to tune into the stream and wait for me to talk about a company. That's not a good experience. But and yet I'm okay. It's at 2% of it was the top percentage of the portfolio after GameStop. I'm like, yeah, that's cool. Let it keep on running. But I do need to make sure that I liked that they did this partnership and we're working on the balance sheet. That's often enough. We are pleased with the overall performance. Unreserved talents. Ronald Adams, he was who they brought in a couple of years back to help. I think it was 2018 to help. I think they've had a couple of CEOs. It's taken a long time to turn the business around. While they prioritized the safety, we were able to report strong operational performance, complete 2 strategic. New Gold's future will be supported by profitable operations and a strong balance sheet. And as our current hedges expire at the end, we will be fully exposed to the strength in gold price. Yeah, if it stays high. You know what I mean? So if you're hedged, you're not fully capturing the higher price of a commodity. That's a risk for any producer who needs to hedge. But yeah, maybe some hedges are multi-year for some of these companies too. So these are rolling off. Okay, what's their revised outlook? I'm not so too concerned with the nuances. Following a 2-week voluntary suspension, I did remember reading that. Development of the self-funded. Say in 2020, the company reports Rainy River. Okay, Rainy River is the mine in particular that was they were having trouble getting up and running. Cash costs. Okay, New Gold. That's the other. What's the outlook? Total capital for the year has increased. Any additional outlooks? Is that it? I can't. See what I mean? So for these types of miners too, you can really get into the weeds. I know that's some people's specialty. It's not mine. I want the broader view on stocks and catch them when they're selling off. Is there any recent articles? July 31st. I don't know this person. Vladimir's July 15th. Oh yeah, I think he's been following them a while. What does he have to say about it? Well, yeah, what does he have to say? Meanwhile, New Gold, what's his conclusion? He's been following him a while because I remember reading his reports back. I don't have much overlap with his picks, I don't think. But I remember he was following the story of New Gold like I was. In my opinion, the second quarter operators will not be able to provide the second quarter production. We'll still get hurt by the hedges, so we'll only be able to fully enjoy gold price 2021. Given the second quarter operation results, New Gold is set to provide its second quarter report July 30th. With so many gold stocks to choose from, New Gold shares will not be on investors. That said, additional gold price upside may still lead to an increased momentum above. So I think he looks at technical. He's looking at the charts too. Nothing else. Okay. It still looks like the same old play. So in that case, continue to watch gold, gold. I like, that's what I mean. Like gold keeps running. This is good. It's the second largest position in the portfolio. And I know it has its own risks in addition to everything. But if I do, and then I'm like looking at the chart, making sure the story's still intact. If gold's still intact, I'm still okay with this. Looking at the chart. If there's something here, this breaking out. Look at these lines. Ridiculous lines, huh? Ridiculous. Maybe you don't. Whoever's tuned in, maybe you're a technical analyst and you want me to stop saying that. What is this? That's pretty. Oh, it's overbought right now. Oh, yeah. So I could be trimming right now, but I'm kind of, maybe I should trim. I don't know. I just think if this is a multi-year move, New Gold's going to keep running. That's why I was buying it. I wasn't buying it for a quick, there's plenty of stocks out there for a quick double, triple, and I, you always have to remember this. You could take that in a note too. Maybe that's something we can do in that note that we take, not just missed opportunities, but the thesis. The rationale as to why you bought it, because you need to know why you bought it and why you would sell it. That way you're not, so you can keep your sanity. Because otherwise you're just looking at I'm going to go up after it doubles. That's not a good process. You need to have a good process. In my case, the reason I bought it was not. It was for gold exposure, and because gold was selling off, and a lot of stuff was selling off. But I remember thinking to myself, I'll hold this because this gold and silvers and precious metals could take off, and they are taking off right now. It's happening faster than I anticipated it. So it's important to keep your cool and not get too giddy about a quick double. I'm pretty sure my average on new gold is 75 cents or something. I was doing a good job buying it right around there, and then it never retested it. Look at this; it's just straight up. So. Maybe in theory, if you get a full team, you can trim. Like right now, it's overbought. You trim right now. Wait for it to come back down to 50 if we're indeed in a bull market. This looks good too. The RSI. I wish I had my highlighter thing. The RSI didn't get overbought in July. Last year. Then it did get overbought now. That's a good thing you like to see. You like to see that RSI when people are buying it, it's getting higher and higher. It means they're buying it more aggressively. So the books say. I'm trying to test that one too. Like keeping my eye on RSA, how meaningful it is. But, do I add? But you know what I mean? You trim when it's overbought or super aggressive, like really overbought, and then wait for it to pull back and buy some more. You kind of that's how you manage the position. It's never buy day one, sell in year two or at some price point or some date. It's not how it works. Ideally, you're supposed to manage the position, and I certainly could have been better about managing that position. Okay, so let's get back to new home, U.S. concrete. Let's see. Oh, I got Tenneco. Yep. So the other day, I was missing Tenneco in the Roaring Kitty portfolio, and I wasn't sure why. And I think what had happened was I had used a stop loss back in like I said it. I must have set it. I was already in Tenneco, and so I must have set it probably around here, and it got triggered, and it saved me. I'm honestly not sure. I don't remember, but I bet I set a stop loss right. I'm like, it was trading shittily, but the trend was looking good. It was kind of going up, and then it was kind of pulling back, and this was in January, and then I think I had it because it was partly trendy. Carl Icahn's involved with it, but very heavily leveraged. That they need a lot to go right, and I think I set a stop loss right around here. I'm like, if it starts selling down here, forget about it. And then it must have got triggered because it's not in the portfolio anymore. I'm like, oh, it's not there anymore? So it saved me a lot of the downside, which is great. But then I must have, when I was buying so many other names, Tenneco was another. I'm going to consider it a little bit of a missed opportunity. It may not work out, and it may give everything back. But just after we touched on it on Monday, I went and I looked at. I looked at Carl Icahn's position. I think he may have even added to it. And then I checked out the bonds. Let me just close out of some stuff here. Started to lose track. Oh, I have bonds open. Let me just check that again. Even right now, it's still at 70. That's bad. And that's it's not good. got down to 40. This is I'm not super upset about this, but when it was trying to trade on a buck something, no, it didn't. Okay, 2 something. It's hard to go wrong. This is the beauty of a value investor. Like some people are really good at doing comprehensive analysis, really thorough analysis, making sure they have all their T's crossed and their I's dotted. And but when you buy really cheap, and I know everything was cheap at this time. I'm not so much calling out Tenneco, but I just mean. And if you're diversified too, it's hard to get it wrong. Tenneco could have gone bankrupt, just to be clear. But if you're buying at super cheap prices relative to that, I know we haven't been doing much valuation yet. We'll see how this goes. But Tenneco, if it doesn't go bankrupt and keep it together, it's worth way more than $3. Way more than $3. And if you know that, then when it's trading below $3, no matter really what's going on, no matter why it's going, as long as it's not going bankrupt, this is why assessing bankruptcy risk is such a big part of my process, because if it's not going bankrupt and they can just bundle along and survive and just get over the hump, even if the hump is 2-3 years, then it will be like a 10 bag. You know what I mean? So it's hard to go wrong. You just need a bunch of these, diversify, and then they'll take care of themselves. So in that regard, I wish I was buying some in the under 3. If there's a couple other names too, Matador. I mentioned Matador, MTDR. I don't want to start making myself feel. No, I don't feel bad about it. Again, there's perfectly good reasons as to why it happened. But I consider them educational because it kind of reinforced the types of things I look at when you're seeing the insider buying, when you're seeing the heavy insider ownership for particular owners, whether it's an investor that you respect or the management themselves, or the bonds holding up decently well, relatively speaking, compared to the other opportunities out there. Those are good signs. And if it's trading cheaply relative to a fairly conservative valuation on the fundamentals front, that's it. You just need to trust. You need to trust that that's going to work. Occasionally it won't, but really, I mean, I feel like it's been working out a very high percentage of the time for me. And so then when I see all the variables suggest that I should have been buying, I'm always like, oh, why didn't I buy? And I try to remember. And if I made a mistake, like in the case of Michael's, it's okay. It's no big deal making a mistake. That's really how you learn the best. You know what I mean? Like I have so many winners. A lot of people do over the past couple months. But I don't remember the story. I'm not digging into the story so much. I'm just like, yeah, I got it right. Great. I'm not picking it apart. But here we are going through the losers, the one that we're like, damn, what could I have done differently? Why did I miss it? But really, you should be doing it for all your positions. In this case, I have so many, it's tough. But you should do what do they call it? They call it a post-mortem, right? After the position's been held, do a post-mortem, see what worked, what didn't work, what could you have done differently, and that type of stuff. But you do it more for the losers. That's just the nature of it, human nature. No big deal. All right, I'm getting kind of tired. What time is it? 8:54. Oh man. All right, I don't feel like going through any more of these names right now. But we got down pretty low. Oh, we were sorted by 52-week. That's okay. You know what I want to do right now, though? I'll take a break from trade. Let's look at some insider buy. Want to do some insider buy? Let's do some insider buy. Open insider. This is it. And then I just opened it up, and we just scroll. This is, you get the filter up top here. It's purchases only, all dates, and is there a minimum? $50,000. And let's go. And this is the thing, if you're tracking all these names and you're not so much super dialed into them, but you're just aware of them and they're on your list, oh, you know what? We don't have to do it this way. What am I doing? I built out this cool tool. Check this. Oh, it's only 1 week though. Wait, what is this? Oh, it's more. Is it more than 1 week? Oh, no, so this is more insider buying. I was looking at this, isn't this 1 week? Yeah. Oh, this is a good amount of insider buying. Sick. I was looking at this. It's been a while. I don't remember. Oh, over a month, 2 months ago, and there was like 5 names. No one was buying. There's been a lot of uncertainty in the market, which is I consider bullish. And people nervous and stuff. That's bullish. Like people getting upset that the market's rebounding. Bullish. People getting mad at the Fed. Bullish. It's like just who cares? What is it? But even the insiders although there were some people buying in March, but kind of people were kind of like, what's going on? Even I was like, what's going on here? What's going to happen? We've unprecedented. And so insiders weren't doing too much, but this is a lot of insider buying over the past week. Look at this. So if, I can't get to it. Right here, this column is based on this. These are all the companies that hit insider buying over the past week, and above a certain threshold, 50,000. I believe 50,000 is the threshold I use, and of course, I have other data in here too. You can see how much a particular company has purchased over the past 12 months, 3 months, and so forth. And then the number of insiders who purchased. I don't have it for less than 1 week, but I have it for 6 months. That's adequate. Okay, this is actually exciting. This is sick. This is okay. I'm going to make a note that I want to do this more because this is kind of screening. I'm not looking for new position, but who cares? It's good. This is something I am on top. I want to be on top of every week. Definitely. Maybe we do it every time. And then once you're in the when you get in the process of it and you kind of know what's been buying, you don't need to be on the ball everything because you got a feel for what's being bought or what's been bought. You're only looking for changes. So right off the bat, I'm seeing a whole bunch of financials. Red is finance. Regional banks. Regional bank insider buying. Not that meaningful for me. But PDF, I think we talked about that on Monday. If PBF weren't such a large position already, I included this. This is sick. It's got my Roaring Kitty portfolio position size right now, 1.2%. It's sick. So right off the bat. So I'm looking at insider buying with the past week. Boom. Any positions? None. I mean, you could do this. Do I have it in the tracker? No, I don't have. So I don't have 1 week in here. I only have 6 months because it starts to get too granular. But so let's see 1 week. Boom. Who bought in the past week? Only PBF. Any on deck? Taco. Or any on the watch list or so forth. On deck is actually lower than the watch list. On deck means like I want to add you to the watch list, but for some reason I'm like, not really. So nothing, but and then damn, I kind of wish I had. So I bought this. I made this. Oh, can I change it? It'd be nice if I could change it. It'd be nice if I could hit a button to change what I'm looking at. So I have the data. So if I could change it, say, well, who bought? Well, it's right here. But it's filtered by. I only have the companies that bought in the past week. So if a company bought 1 to 2 weeks ago, I don't see it in here necessarily. Like I would kind of like to see that because I'm not on the ball. But if we get on the ball and we turn this into a process, then we'll be that we'll know. We're definitely. It's okay. I'm not going to add that right now. So let's just see. So the bright green, that means a ton of insider buying, over 1 million. Yep, and we can pull it up by coming here, pulling this up, check it out. Boom. This firm is not Slim's firm, but it's a Slim. It was signed by someone named Slim, so it's his brother or his cousin or something. I don't know. But it's safe to say that it's related to Carlos Slim. So that's bullish. If PBF weren't such a large position, I think I'd be buying right now. I think the chart looks good. I don't think it's really battling liquidity issues. I think this chart looks okay. I think it has higher quality refiner assets. And if we pop it in here, I think I just did this recently because I was like, I think I should buy more of this. The bond's holding up okay. Is anyone saying anything about it? I could check Twitter too. I don't feel like it right now. It's a way to play the energy industry. Of course, it's kind of inversely correlated with oil prices because, they'll benefit as oil prices are declining because that's their input. The input is the crude oil, whereas gasoline prices are a little bit stickier. So as crude oil prices collapse, they might still be generating a fat profit because gasoline prices will move down slower. Yeah, I mean, maybe people don't like I don't know. I forget how much Slim has. He has quite a bit of the port. Let's look. If we do this, and we go to PBF, I think. Oh, look at that. Yeah, here we go. We can see how much he owns. So if I want to just sometimes I pull up Well Wisdom, but sometimes I want to see the proxy. I want to see the proxy statement. 20%. So he doesn't even own all of it. I thought he owned more than that. Wait, so this says, what's this say, 23 million? What's he got? Got it right here. 23 million, roughly. Okay. That's a good chunk. I mean, it's not that I know very little about Carlos Slim, except that he's uber wealthy, right? And probably knows a thing or two about investing. I really actually don't know if he's a good investor, but someone like that, get involved with a firm like this that I think has higher quality refining assets, it's a risk mitigator. Um, but it had been a while since he'd purchased in March 31st. See that? And I was like, why did he stop? He looks like he waited the whole quarter. He didn't buy anything in Q2 there for some reason. There's plenty of reasons he didn't buy, but I'd like to see it. Okay, all right. Any other break greens? So I don't care about banks too much. Franchise group. Didn't this one come up recently too? Weren't we talking about this one? Whoa. 10 million. 10 million? From the CEO? That looks good. Well, B Riley Financial. Oh, that's a big buy though. Oh. What's this? They sold at 10. Oh, this is probably some. They sell them to each other. Oh, these are like some. They're not. Are they PE? They're not PE firms. Kind of like they get control of a company and they. What's going on here? Canal Capital was involved too. You know this company? They were. It was Was it in a merger or something? I feel like I just talked about this. Oh, that's right. I was following Liberty. Oh, they go. Oh, yeah. They've been buying up like. I was watching Liberty Tax. Then it got acquired. It was like weird. And then they bought Vitamin Shop recently. They bought Sears Outlet too. I didn't know that. All right, so this is the one that owns all those assets. Okay. You know what? I'd like to make a note of that. Where is it? Right there? So me checking this off, it should pop up in the universe file. The universe spreadsheet, I don't know. Will it work that quickly? Sick! All right, so I'm going to make a note of this right now. This is kind of interesting. I didn't know I'd be making a note on anything here. But what I can do is, see this section here, FRG just popped up. And then these columns, value, confidence. I don't know what the value is. Oh, but you know, it should have just popped open. Value, let's take a quick peek at the financials, although I think it's just like... Is it going to be here? FRG? It should show up here. Wait, is it going to show up here? Is it grabbing the insider buying? Hold on, I just want to see. Send, is it grabbing FRG? Oh, it's not? Oh, that's a mistake. FRG should be right here. Because, see what this is doing? This is going and collecting all my... Oh, it's there. It's right there, okay. Oh, no, I just typed something. Sorry. The weight, oh, there it is. Boom. I screwed everything up. All right, while that's let's go take a peek at the comparisons. FRG right here. 10 million, huh? To be honest, this kind of concerns me. All these firms kind of involved, like they're rolling up firms and stuff and acquiring them, and it could be. It's not a bad thing, but it's just like they know stuff I don't, and they're buying though. But 10 million at 23. Wait, what was that? No, that's the price. So I have to read. I'm gonna have to read what's going on here. Look at all this buying and. Oh, I thought I just had FR. Did I lose it? I really messed everything up there. Okay, let's just check the metrics over here. 0 revenues. Yeah, see, that's inaccurate, right? Because I know Liberty Tax had revenues. I remember saying this last time. I think we saw some insider buying that last round of insider buying. It's up that much from the low. Should I be tracking this? Wow. Yeah, like would they just take it public? They merged everything together and then they took it. Shit. Chart's looking interesting, huh? What are the odds they took it public at a discounted price, though? You know, that's the thing. That's why IPOs. You know, you would think that they took it public at a override, but then they're buying themselves. That's meaningful. And we're right back to where that. I don't even know if it was an IPO. Wait, whoa, here's the IPO. What am I saying? I not IPO. I mean, I got to look into the story. But what are the other metrics? Wow, that's up quite a bit. What's the market cap? 1 billion. Okay. Sales to price. Nothing highlighted. See this? Look at it. Conditional format is saving me here. I can't even see. All right, so it's not telling me much. I'm not seeing anything here. Okay, but I don't even know if I'm going to be able to see fundamentals because if they just took it public. Look at this. Am I going to have anything? I don't know. Bummer. So I'd have to, so that's the thing. There's not going to be much data. I have to dig into this, but this one looks interesting. It's not the I don't, I'm going to have to do work to look at. Is anyone saying anything about it? Like, I think it was weird. They got weird assets. They don't seem like the types of assets that would be super cheap, though. Oh, they just reported. No one's going to talk about this. All right, at the very least, I need to... it doesn't seem like a company that I would love, but maybe it's worth it. Maybe it's in a diversified portfolio, something like that could just be worth the position. I wish at $25, I'm gonna have to open up the financial statements. I'm gonna have to do work, right? I have no fundamentals here. I see all the firms doing stuff, taking positions or something. So I have to go look into what's going on there. But then I'm stuck with, is it worth it? Because with that type of with those types of characteristics that I've seen so far, I'm not even going to have fundamentals beyond this year. I'll be able to pull up the balance sheet. Let's do that. Okay, so you get 105 million in cash. You see 105 million in cash. Great. What's book value? Just right off the bat, just to get things started here. What? 0? Oh, preferred stock. Thank you. Jeez. 352. Just quick 6. Just a quick 352 divided by. Just tell me what book value is. Just get me started here. 40 million. $8 in book value. It's trading at $25. Trading at three times book value. It's not bearish, but it's not super compelling. Then you see the common stock, you see it doubled, but would they just issue shares or something? All right, so something's interesting going on here. I'm gonna track it, but it's not the type of thing I like to get involved with. There's just so many other things that look compelling that is it worth my time? You gotta be. Your time is important, and so you gotta try to incorporate that into whether or not something's worth pursuing. Like right now, it's important to track too, though. So let's open up the universe. Let's make a note. You know what? I'm gonna actually take. I don't even know. Was the business in there? Oh, was that? So I have the business in there. Why do I keep opening this up? I added it late. Look at this. It's right here. It's habit. This was a late edition. I kept on going to open up Yahoo profile. I just need to quickly, when I was going through everything in March, I'm like, I just need to know what the business is. Tell me what the business is. What do they do? Just quickly. I had to leave the spreadsheet, go see the profile, come back. And this is why I added this, but it was a late edition, and I keep forgetting that it's right there. So I'm going to try to remind myself. So it's already there. Perfect. But the only thing is that I'm not tracking it, but I'm going to track it now. And I'm just going to add it to the watch list. So I do that by coming to FRG. And then I'm going to say... I'm going to make a tag for myself. I'm just going to say, so I got a cool thing here. Oh, watch this. Right here. Hey, Roaring Kitty. See Roaring Kitty? Cool. Show sidebar. And then let's add some tags. Insider buying. Wasn't it the CEO too? And PE firms. Okay. many spreadsheets. P. No one I know though. I don't think I would have included B. Riley. No, I don't have enough overlap with them. Usually when they're anyone else, Liberty Tax, Vitamin Shop. I tracked Vitamin Shop too. Characteristics. I think I'm gonna add a new one. I'll say special. What would you call it? A roll up? What's a roll up? Like you're acquiring all these businesses. Investments roll up. It's like when you're acquiring a whole bunch of businesses, but usually it's not so. These are more like. I mean, are they they're not really. Are they in the same market? I guess they're all retailers. You know what I mean? I guess they're retailers, so it is a roll up. I'm glad I got that right. I don't deal in roll ups that much. They're all retail. I mean, I guess that's the common denominator. Liberty Tax, Sears Outlet, Vitamin Shop. That's good enough. We'll call it a roll up, and I'm going to add it to as a possible characteristic. And you do that like this. This was a pretty sick script that I'm glad I found. Roll up. Perfect. Rebuild. Come back to submit. Go back up to FRG. Let's continue our tagging. Roll up. Oh, did I lose my checkoff? Ah, I lost them. P. And the only other man, not turnaround. Special. It's probably leverage, but I'm not sure, so I won't say. Oh yeah, let's say we got the balance sheet. Long-term debt, 600 million. Cash, 100. Book, 30, 350. 352. 352,000? 352,000? I thought it was, everything's in millions, you know? And this spreadsheet, this balance sheet's not. When I was looking at this, I wasn't looking at these. Oh, so there's no book value. So it's all debt financed. Oh, okay. I'm not gonna buy this. I'll track it though. Look at the assets. Oh, there's some leases in there too. Over $1 billion in assets. Inventory, a lot of inventory. Roll-ups. What was that famous one? The famous, was it the one with Ackman? You know what I'm talking about? That was a famous roll-up in the medical sphere. I'm gonna let me tag it. Let's finish tagging it. And did anyone write about it? I already looked that up. I think I did. Yeah, no one wrote about it. I think I was looking at the news. I wasn't looking at. All right, let's do it. Submit it. Bummer. Oh, can I still track it though? Where'd it go? FRG. Should we track it? Yes. Nah. No. Well, we got to track everything. Wait. Oh, it's already tracked. Should I add it to the watch list? Sorry. I'm gonna add it to the watch list because of that insider buying. No, I'm gonna on deck it. I'm gonna on deck it. I don't think I want to buy it. It's not really my style. I really like insider buying. That's why you're seeing me get stuck here because I really weight insider buying so heavily. And let me just submit this. See this one more time. But look who's buying. I don't mean to knock these people. For all I know, it is a buy and it's going up. But I start to lose conviction when I start dealing with that type of stuff. But I already have so many positions. If I needed a position and I was like looking to put capital to work and there's not much that's cheap, this is kind of, it could be interesting. I wish I'd have to look through the balance sheet. I don't have a history of historical performance across all these companies. You know what I mean? They're so varied businesses. It's a lot of work to try to get to the bottom of that. And I don't know that it's worthwhile considering all that else is out there in the other positions in the portfolio. So, okay. What else we got? Any other bright greens? FF5. I don't know what that is. What's that tech? I think the light green is communications. How's the chart look? Sometimes I'll just take a quick peek at the chart. Oh, the green is the blue is the green is the chart. So you know what's good about this too? So this is that's a lot of insider buying. $1 million, not bad. But a communications company, I'm not gonna go dig into that. Nah. Like I said, I'm not desperate for a position. I'm not so much screening. I just want to see what's happening with the insider buying. It's happening in Taco. Did I own that? No, it's on deck. I never owned it. If I owned it, it would have been in the watch list. I looked at. Did I not buy it? I could have sworn I bought it though. I definitely looked at it a long time. I think I might have looked at it around here. So it's not up that much. And I thought, I didn't like it with everything else. Okay. It's on the on deck. That's okay. I don't think it's probably not that cheap. You know what I mean? I don't remember the specifics. Look at this. Yeah, so it's at least on. This isn't what the value is. I'm just saying it's not like it looks like it's sold off a ton and looking super cheap. That's okay. Okay. Kellogg. I did see Kellogg. I saw Buffett was buying Bank of America. Would that be here? Should be. Right there. Oh, look at that. I was talking about the bright green. Is that 337 million? Yep. Sick. Anything else catching your attention? I don't see much. Oh, Knowles? Knowles? How come I'm not watching that? Isn't that a... Oh. I'm over here clicking around. Let me just check the profile. What is it? Oh, no, that's not what I thought it was. Radio frequency solutions. That looks like an interesting business. What's the market cap? 1.5? It doesn't look like it sold off a ton or anything like that. How much was the inside? How much? 151? That's not that much. Mickey, all right. I don't see much. Westinghouse. Phillips 66. Pulse, yeah. Cincinnati. Oh, yeah. LDL? LDL. I looked at this one. All right, let's take a peek at this one. Ooh. Do I own it? I think I looked and I didn't pull the trigger. Probably no insider buying, and now there is. Okay. When did they buy? They bought it at 16. Did it just make a big, huge jump? Oh, it did. Nah, it was 25%. That ain't bad. Oh, I want to take it. So here we go. Industrial. Check it out. That's what's the market cap? 367. Okay, here we go. 367 market cap. I definitely looked at this. Must have the lack of insider buying right off the bat. If I didn't see the buying, in fact, it was this is nominal selling, and not for a while. Okay, so it was maybe the lack of insider buying. This is a good size. This gets my attention. 500K. Industrial metals. What's the business? Let's check it out. Specialty engineered filtration media. Industrial thermal insulating solutions and automotive thermal and acoustical barriers. Okay. Operates through performance materials. Connecticut. All right. Kind of interesting. Varied industrial. This is up my alley. 300 million market cap too. After a huge rise, I feel like it's still small though. Man, I missed this rise though. How did I miss this? See, this is why it's important to track. The LDL definitely I wasn't tracking because I would have known about it. Let me close out some stuff. Where's LDL? Right there. Oh, I already got it open, don't I? Oh, it's right here. Sick. All right, so here we go. So it's growing. Oh, okay. So right off the bat, I see. This is what I'm seeing. I see two pretty stable business in the early 2000s, and then slowly grow. This is some nice growth right here. Look at this slow growth, but growing, and then I see kind of a quick leap up. Doesn't it feel kind of a quick jump up to 800? So this is you might think, oh, that's a good sign, which it is. But then I think, was it financed by debt? Did they make an acquisition or something? And so now I'm going to go look at debt, and yes, it appears as though I assume these aren't leases. This is legitimate debt, and this is net common overhang. And I got a definition here for you: long-term liabilities plus short-term debt minus excess cash. So these are like claims on the assets that are above shareholders in the case of bankruptcy, let's say, and you know what I mean? So there's long-term debt, right? But then there's other long-term liabilities that if the company went bankrupt, they'd be ahead in priority from shareholders. And then short-term debt. But then not all long-term liabilities are like that. But I just need a quick rule of thumb. That's what I do. I'll err on the side of conservatism. But they paid it. So that whatever it was, it dropped 25%. So are they actively paying it off? That's good. So you know what I mean? Like they had a history of pretty strong equity growth. So I don't have the definite. Do I have the? Oh, here we go. The change in book value. So when you see book measured ROE and book measured EPS, that is the change. Right here, sorry. It's the change in book value per share plus dividends per share. I think it's a nice way to measure equity growth. Most people, I mean, usually earnings are supposed to be representative of that, right? That's how much your assets earned, but there's variations in it that it doesn't work so cleanly. There's other things that can cause book value to change. There's 4 prominent ones that I forget off the top of my head. You do a quick Google search. That's what you see in the that other financial statement that no one looks at, like the change in shareholders' equity. That's where you see the other changes. Let's look one up. I kind of want to check it out myself. Let's pull up the just 10K just quickly. Oh, 13D. 13D. Oh, is this icon? No. I want to say this is someone prominent. No, I guess not. Because I thought Juniper targeted opportunity. 13D. That means that's they're taking an active position. I mentioned this in the GameStop video. That's what Scion took. When they had the 5%, that means it's an active. You took a position greater than 5%, and you're actively I don't know to what extent it means you're taking action. Maybe you're just communicating with management above and beyond what a typical investor would do. But you like to see 13D because that means they're not messing around. You know, they're like I'm invested in this company. I'm here to shake shit up. You know, that's why That's why I was glad Burry. Maybe he had to sign file a 13D. I'm not really sure the nuances of it. But anyway, just in general, 13Ds are good because it doesn't mean it's going to work out. Obviously, I'm not saying that, but it just means the person who bought into it, like, we're doing this. You know what I mean? Like, we're here. We're doing this. The 13G just means it's more of a passive position. Still relevant. It's a 5% position. Who would want to own more than 5% of a company they're not serious about? But nevertheless, I don't know this. This means nothing to me though. Juniper Targeted Opportunity Fund, done. I have no idea. Doesn't matter. It just stuck out to me when I was clicking there. So. But just quickly, I just wanted to pull up a 10K. Statement, this is the consolidated statements of income. Right here. These, 4 prominent things. 1, 2, nailed it. Nice. Pension changes, foreign currency translation adjustments, hedging. I think this is in total other comprehensive income, which I forget what that one is. I definitely looked into that. After after-tax and reclassification. I forget what usually gets grouped into that. But anyway, when you see book value change, it's not just earnings. It is earnings, right? But it's then these additional items as well. But usually, they can be meaningful. But earnings are the more important part because that's speaking to operations. You could argue that these are a little bit less operations related. I'm not saying they don't matter. I just mean blah, blah, blah. But they matter as far as equity growth goes. So anyway, I see this. I see some purple and green. Green and purple's good. If I see that green and purple's like they've been having some good equity growth. Are they paying a dividend too? Oh, dividend's blank. What the hell does that mean? Is it messing up? Oh, it's even better. That can't be. No, they just got some solid equity growth? Really? How come dividend? Usually dividend should say 0 or something. That's kind of weird. But green, purple, this is a good company. There was a good company. And then a huge write-down this year. Goodwill. Always view Goodwill as a future write-down, unless you're a really badass company. Actually, we have this open. Can I just do this? Can we see the write-down? Goodwill write-down. Just assume. All right, so a big write-down. You know what I mean? So you get a history of like running a good company and then they mess up. Maybe I don't know if there was a change in management or something, but I don't know if they're getting greedy. Maybe it was just an honest mess up and it just didn't work out in their favor. That's always a possibility. You can't know just by looking at the numbers. But I think too bad. That's what I think. It looks like they may have levered up to make an acquisition and then they had to write it down. Maybe. Because it's book value book value decline. Okay. How about earnings? Solid earnings. And look at this. Minus $7. Write down. Look at the cash flows. This is why people criticizing GameStop for these huge earnings losses. Who cares? It's cash flow. Look at this company on a cash flow basis. When you see the losses for earnings, you might think I might first criticize management before I criticize the business model. You know, It's like management messed up. You somehow messed up, or you just got, like, if you're in oil and gas and oil prices get whacked, it's not the management's fault. You have to reduce book value. It might be, but it's not really their fault. But a business like this, where's acquisitions? Can we take a peek? Yeah, look at this. See this column right here? Oh, I'm blocking it. Let me flip over so you can see. See where I got net acquisitions per share right there? I'm going to go flip back just so you can see. So they had a huge $4 per share acquisition, which is just huge. How about sheer dollar amount of that? So if I go over to here, oh, look at how far I got to scroll. Sorry about that. Do I have just aggregate acquisitions? I don't want to have to scroll down to go see. If it was here, I'll see. What? Oh, right here. 260 million. Look at that. By far the biggest acquisition that they had. By far the biggest acquisition, 267 million. And did they immediately write it down? Is that what happened? It looks like that may have been what happened. Could have been this one that they wrote down. I don't know. But look at, okay, so it's not a huge company though, so that explains the market cap. This operating cash flow they've never made more than 100 million in operating cash flow. Not a huge company. Which is potentially a good thing. That's what I mean. Look at this. This is operating cash flow. Forget capex. This is just sheer operating cash flow. They've totaled operating cash flow over the past 5 years of 336 million, and then they acquired a business for 230 million. That seems steep, doesn't it? Just there's nuances, but I just think seems risky. Seems risky. And what about simple free cash flow? Even lower. Look at. So let's see how far back I have to go to get to 229. Boom. This is 1, 2, 3, 4, 5, 6, 7 years of free cash flow out the door. In theory, I'm sure it was debt finance. We can see it, and we can see a commensurate increase in debt. Yeah, see this? 77 million to 322. This column, I know you can't see it. Oh, you can kind of see it. Move my chair. Boom. Total debt. 77 to 322. And it's not a problem per se. It's not a bad thing. It's a lot of risk that you took, and then COVID happened. I don't even know how that may have impacted their business model, but you should get a little bit. But that's okay. This is opportunity, right? I see this. I think, they messed up, but now then it hits my radar, and I'm like, okay, now there might be something. If they hadn't done that, it may have never traded cheaply. Well, how cheap is it, right? Oh, did we say it already bounced back? Damn. I wish this was a mistake, it not being tracked. Do you know what I mean? Like, I would have seen all that happening. I would have seen this unfolding. If there was any insider buying, I would have seen that. Like historical? No, not much. So that wouldn't have got on my radar that way. But I would have seen the huge sell-off in the price. Because in March, when you're part of the screening process is literally looking at the charts. Looking at all the charts. Which stocks have sold off the most, and I'd see this decline from 22 to 5. Doesn't mean it's got to bounce back to that. That's not the point. The point is it got whacked because of all that's going on, and therefore, in theory, it could bounce back if it turns out not to be as bad. It already did. It's already back to $20. It's a 4-bagger. I wouldn't have got the 4-bagger, but I could have got a triple if I was dialed in. This is the importance of tracking, keeping your list. Not so much checking it twice, just keeping tabs on it, that's all, and making notes on it. I'm not upset about this. This is a good thing. I get excited when I come across a company. I track so many damn companies that I get excited when I come across a new one that has some characteristics that I like, and it's unfortunate I missed this. But again, there's plenty of opportunities back then. There's going to be way more opportunities in the future. This is a good thing. I'm excited that we got a new company. I'm going to track it in the universe, and I'll add a couple notes to it. But I just want to check a little bit more on the fundamentals. So it's still like I'm probably not interested in buying it right now. Look at that now, tangible book. But definitely simple free cash flow pot. Like I said this with GameStop too. Like complain about the business model all you want and the risks and stuff, but it has generated free cash flow, a ton of free cash flow. And then I look at LDL. Look at this. So as my critique of their capital allocation decisions, but the business is making cash, not a ton of cash. What's the average? It's only made a total of 207. Oh, see what I mean? 229 million acquisition. In the total 20-year period, they've only made 321 in simple free cash flow. All right, that's kind of concerning to me. They had rapid growth in recent years. I get that, but anyway. But I'd like to see it. A company that's like all over the place, volatile, and not generating that much free cash flow, especially in recent years, is a little bit. It's a risk. It's not a bad it's a risk, and it could be a good risk. But in particular, I don't love to see this action, but I love to see it when it happens before I get involved, and then the price is sold off, and then I get involved. So that's what I mean. But now, I just mean getting involved now. I don't like to see this. But had I got involved a couple months ago when it was traded in the gutter, I probably would have been excited. I would have been more excited about this. What is it trade on? Revenue $745 million. That's not bad. It trades at a 25% operating cash flow. That's not that cheap. Simple free cash flow yield 16%, but indebted. Yeah, simple free cash flow $3 per share. Jesus, that's not bad on a $20 share price, but levered. So but are they paying off their debt? That's not bad. They're paying off their debt. See what I mean? Or do they buy back? What do they do? Or wait a second. Go back to debt. No, debt's pretty stable. So something else happened in the book. Something else happened in that net common overhang that wasn't debt, but it got reduced because net common overhang per share declined 25%. Well, you can see it. This column right here. Damn. Okay. Is there enough to keep going with this? Track it. Move on. Not even tracked. Cool. New track. Not track. It's excuse me. It's not on the watch list. They're all tracked. In my terminology, I've confused myself. What we're going to do is we're going to say, let's add some notes. Oh no, did I not fill that active cell? Oh, I didn't add my notes. I didn't add the notes. I messed up. Let me just redo FRG. FRG, we called it on deck, and then I got to go to, where's the active cell tags, then do fill active cell. It should place it right there. Come on. Yes, then click submit. Now we'll get sent over to the DB with those notes. Let me take a peek, and it should clear that out. Nice. All right, and then let me add LDL. Value. So I did value it. Oh, that's interesting. Oh, because I think I looked at it recently, and there you go. We finally got it. Finally got a damn value. $23. I said. $23. All right. Let me just reassess that now that I took the time to value it. Let's see how I got to $23. So. We were kind of looking at some of the things I look at. I'm looking at simple free cash flow, and in earnings, this is good earnings, $2 per share, pretty solid, even on a debt adjusted basis. But then it even looked at $1.60 last year, adjusted for the debt. That's not bad. Yeah, it's just not cheap enough right now. $23, I'm okay with that. You know what I mean? So I'm not doing a discounted cash flow analysis. I'm just looking at what multiple would I pay for a business like this? What multiple would I pay for a business that's an industrial, manufacturers and markets, specialty engineered filtration, blah 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 blah. I'm obviously not an expert on that, but I can look at the margins and see they got some fatter margins there. Look at this. Look at the historically lower margin business, then some losses during a tougher economic period. Okay, so but then they got margins back up. How about on a one-off? Did they just have one big year of net margin, like a gain or something? No, legitimate increase in net margin, legitimate increase. And I don't know if it was a change in cost management or what happened. I'd look into that. That's a meaningful jump, doubled. Net margin doubled. So then I'm like, all right, industrial earning about 1, 2, 3, or let's say 3, 4%. This makes me nervous that it's only a couple of years of this. And then it'd be great. So I see what historical tangible book was. I see it kind of fumbled past couple of years, but this looks like this was still a good value, a good book value back then, because it was a historically well-run business, and I can tell this by book measured equity growth. I can tell this by earnings growth. I can tell it by revenue growth. It was seemingly well run, and so up till this point, it struggled, but it's a cyclical business. You have no choice. You're gonna have losses, and you're gonna have equity growth stumble at times. You're gonna have the non-purple and green areas down here, but they got right back to it. And I'll be curious about how the management team changed over this time. I'd be curious about that. But historically positive free cash flow, even during this big off year where they had a write down, right? How much was this insider buy again? This looks kind of okay. 500 grand. Who is it? Just a director? Did he buy anything else? CHD. What's that? Church and Dwight. Oh yeah. Well, that's a big company. Was he a director there? Oh, he's the CEO. He's the CEO of Church and Dwight. Is that like a big home Staples? Yeah, 24 billion. Is he the CEO? Oh, he's no fool. He's CEO of a $24 billion company, and you're a director in this company, and you're buying shares. I mean, many times they're buying shares to make a point. I mean, he's here's the other thing though. He's going to be uber wealthy. I don't know what he makes for Church and Dwight. Watch this. We're going to pull up the DEF for Church and Dwight. Compensation of directors. Oh, this is only 2019 compensation. Check this. See what he makes. Oh, now I get to go hunt for it. I don't know where it is. Compensation committee. Compensation of directors. What about the management? Boom. No. Boom. What's his name? Farrell, right? Matthew Farrell. Look at this. See? He made $9 million last year with a salary of $1 million. And he bought $500,000. Not just observing. $500,000 is still real money. That's the thing. I think I said this in one of my videos too. Some people will say, well, how much was repurchased by the insiders as a percentage of the market cap, as a percentage of the revenues, as a percentage of the compensation? And that's a good idea. It is. But I find just the sheer level of it is a good indication. But in this case, $500K is real money. For him, it's not that much money. Do you believe that? $500K, not that much money for someone. He bought it at 16. That's right. It had a smart jump. I feel like we it was there on Monday. Did we look on this on Monday? Is that a 25% move? It kind of rings a bell. Like I feel like I was just talking about this recently. Monday? We weren't talking about Monday though. I don't think. Okay. Well. So I think this is a quick, I don't know how much we spent on this, but this is a good insight into the types of stuff I'm looking at. I'm not, especially right now, there's no need to get a perfect valuation. Who cares? You don't care. I don't care. It doesn't matter. We just, we got a feeling for the company. I hope I can remember. This is where we should take a note. LDL, Lidl, Lidl, insider, individual investor. I don't know how to pronounce stuff. We'd make these types of notes. Historically well run, decent sized company. Not decent, but like a company that's in my wheelhouse. It looks like there was an acquisition. They may have messed up because it was an immediate write-down, if that was the same write-down. But historically, free cash flow positive. Some pretty solid free cash flow relative to the price. An insider buying by the Church and Dwight guy. But as a small percentage of what his income is. And as a percentage of book, this is the thing. So it's unlikely that the business model changed dramatically over the past 10 years. So we're looking at 20 years, right? Unless something dramatic is happening underneath, which is always, it's conceivable that that's happening. There's a transformational opportunity, a transformational thing happen with the company. It's not usually the case though. And so what we have seen for historical equity growth over the past 20 years, yeah, I'm not saying that's what's going to happen in the future. I'm saying you shouldn't forecast anything that's significantly crazier than that unless there's something crazy unfolding. You know what I mean? So when I see this equity growth, just slow but good, decent equity growth, this is what I mean. This was a missed opportunity in March, because if I see something like this, if I see something like this right here, right? Forget the past 2 years and forget COVID and everything like that. If I open up this and I'm looking right through, I know you can't, you do need to move, you do need to be able to see these columns. Here, let me just flip myself so you can see this. You do need to be able to see the operating cash. These are all free cash flow metrics, these columns, just something to bear in mind, net cash flow and so forth. But just looking at this, and then you tell me what the price point is, that it's $5, that's a buy. No question. No question. That's it. That's a buy. So this is educational for me too. Just a good reminder for myself as to things I like to see. And then I'm getting turned off by other stuff. But this right here, and and then you just know the price point. You tell me it's below $7, buy. The only thing I would just check, and I forget if we did that here, are the bonds. Just a quick, like a heat check, you know. It's as a smaller company, it's not going to surprise me if they don't have publicly traded. Yeah, it might be bond, it might be bank debt, $300 million. In which case you're not going to have a bond that's traded and we're going to see a yield or anything like that. So good, cool. But now we see what happened. So this is some additional risks that have unfolded, and now book value is not quite as secure. That's a thing. You certainly hope that the assets they bought, if not as good as they thought they were, that they can still generate the free cash flow, because look at book value. The book value has gone from tangible book value. I'm talking about tangible, because what if this gets written down? What if this excess, and it turns out that it was a complete wash, that acquisition, and it was a huge, and it was this isn't uncommon. This happens with the big, what was that big one? The famous one, was it AOL or Time Warner AOL? No, that wasn't it. The Yahoo bought. Who'd Yahoo buy? Remember Yahoo bought one, and then they immediately had to write down the full damn thing. So it's not that uncommon where you shouldn't expect it to happen. But so this could happen, and then it's a permanent loss. It's a permanent loss for the shareholders of the company. That's why if you view it from a shareholder's point of view, it's a bad move. But someone who's stepping into it can be like, all right, that's good for this. It's resulting in opportunity. So some interesting stuff here. Definitely going to track it. And I just don't like the price point. $23, I'm okay with that. So $15 was the book value before kind of shit hit the fan. I could see an upward valuation of maybe $30 because there's some solid free cash flow there. Sorry, I know I'm jumping around. I'm just I keep on wanting to see the free cash flow. A buck 50 and adjusted, even unadjusted, $3. Oh, let's look at the cash flow statement. You know what? Can I? It's just, I hesitate to research this too much, only because with such a strong bounce back, we're probably not going to see it cheap for a while. You know what I mean? I'll have to revisit the story. But I kind of just want to, like I said, I don't come across new companies all that often, so I'm a little bit, so look at this cash flow statement. It's a gain, depreciation, usual stuff, impairment, yup. Employee benefit, oh, they got an employee benefit plan settlement expenses that added to operating cash flow? Oh, because it was an adjustment why is this in operations? Still counts as operations? I would look into this one. That's a pretty sizable chunk, $25 million? How much pensions? So when were we talking about book value and net common overhang? How there's some additional long-term liabilities. Pensions are one of them, and clearly that was one of the things that mattered here. Operating cash flow. And then this is just the working capital. This is the only thing that sticks out to me up here. And then this is the average. You're going to see some things are going to be up some years, some things are going to be down on this part of the cash flow statement. Sometimes you might dig in, like in the case of GameStop, you're going to see they're trying to improve their working capital, so you are checking out these adjustments, but it's reflected in the balance sheet too. See what I mean? Changes in operating assets and liabilities, these are all things that are on the balance sheet, and you'll see those changes. See benefit plan liabilities, you see those are being reduced. Okay, so now let's see, CapEx, pretty simple, that's the benefit of one of the benefits of small companies. Opportunities aside is that it's a very simple, clean balance sheet. I like clean financial statements altogether. Cash flow statement here. Um, CapEx. Okay. So seemingly legitimate free cash flow just at a quick glance. Not too concerned about this stuff. Debt repayment, paying back some of the debt, but issuing some debt too. No, straight pay. Straight. Okay. All right, I'm just gonna keep the 23 in there. I think that's good. It's in the ballpark. You know what I mean? I used to do valuation ranges, like here's a low valuation, here's a high valuation. It's just unnecessary work. Who cares? Sometimes I don't even do the valuation. See what I mean? We have so many names. I was surprised. This is what I must have looked at LDL the past couple months because I just redid all these spreadsheets and I didn't carry over the values for a lot of them because the market made me look like an idiot for a bunch of my values a couple months back. And I'm like, I'll just redo it during the stream. Which we haven't done many of these yet, but that's the goal, is to just quickly toss in some of the values for some of the companies as we get there. So we'll keep the 23. It could be 20. It could be 30. I don't think it's 35. I don't see enough to warrant 35. I don't see that. Oh, I don't see 60. Nope. I see, what's this? I see this one, 28. I can see this. $30. I see this. This seems like that debt-fueled earnings growth. Yes, I think so. This was 2017 too, so there's a lot of things. This seems like it was excessive. Look at this too, and then you see the price down below $7 and you see where it was. Again, not that I think it's going to get back there, but price matters. That's where it was. This is really difficult to just. This is what caught my attention last time. I forgot about this. I saw this. I'm like, what the hell? $60 down to $5, and I think this is just a case of this was overvaluation. How do you get $60 from? You can't get $60 from this. So you can't get. The only way you get $60 is you see this recent growth, this recent revenue growth. Oh, this was 2017, wasn't it? So you're getting through 2016. They released results for. What was going on back then, too? You always need context to what the market was doing, too. No, things were... Industrials were crushing. Oh, they didn't even sell off that much. Wow. Did I just hit something? The data just broke. See what I mean? Individual investor? What time we got? 9:48. Holy hell. If I refresh, I probably a lot. Sometimes this just goes in and out. Bummer, because we were just trying to get to compare those fundamentals to the bummer. It'll come back, but that's annoying. Wow, there must have been some banker. They must have. I look at this drop, huh? $20 to $12, almost a 50% drop in one day. This was still February too. It must have been a really bad. Maybe I probably looked at it then too. That didn't work. That's bummer. Okay, we'll keep that and then we'll just submit it. But 60, that ain't worth $60. What they're doing is they're extrapolating recent performance, and that's what I mean. If it's a transformational change for the business, which, like I said, is possible, then okay, then you can't use historical performance as a basis for the valuation because historical performance is no longer as relevant. And see, now I'm messing up the stream because I'm doing that. Hopefully my stream picks up there. Kind of just slowed down again. So like I said, if there's a transformational change happening for the business, then you can start extrapolating a little bit differently. But in the case of LDL, I don't see it, especially after the write down now, right? Like, what the hell? You couldn't have seen it in 2017, 2018. I never would have hold. I don't think I would have held to 60. Like I said, I'll hold for the trend, but that seemed excessive. $15 in book value, even if it's earning $1.50, $2 in free cash flow. It's hard to get to 30 times that. No way. A net margin of 3-4%. No, that was overvalued. I rarely say that too. It takes a lot for me to say the stock's overvalued because often I hesitate to say for the tech stocks because I'm not sure if they're overvalued. They could be taking over the world. You know what I mean? And if these are true monopolies and they're going to persist, then some of the valuations, I don't know. But for industrials, I feel pretty confident about it. Again, unless I dig in and see that there's actually changes happening, but I haven't. But I've seen it enough where I think, nah. So let's just submit this. Let's track it. Definitely already tracked it. Watch list. Yes. And let's say, let's just make a note. So it is, I don't have it as a tag. Oh, can I do a couple tag insider buy the board? No one owns it. Did anyone own it? Hold on. Someone may have owned it too. They caught my attention. Can't remember. Oh yeah, that Juniper 13D. I don't know Juniper though. Hey, well, let's pull it up. This is what I do. This is what gets my attention. Because I'll go see what else they hold investments in, and if I think, oh, there's a lot of overlap with, oh, it's their second largest position. Okay. What price did they buy at? 13. Where's that 13 day? They filed May 5th, 2020. Oh, nice job. Nice job, Juniper. Nice work. It's $10, not bad. And if they're final 13D and they're going to get involved and make some recommendations as to what they can do differently, then maybe they'll get to the $30 that we talked about. And maybe they just need to fix the operations a little bit. I mean, you could see 35 as just a fair value, right? Stock price can trade anywhere, like you just see with LDL, right? But I just mean for conviction, for building a position, being confident. I could, in the context of our broader portfolio, LDL at 10 makes a lot of sense, and at 5 it makes a ton of sense, right? But I couldn't build a large position around this at $20 if I think a fair value was like 20 to 35, 20 to 30. I mean, that's real free cash flow. So if you just get in there and you just fix the operations a bit, you could justify $35. $40 is risky. Oof. And if anything above that, nah, I don't see it. But let's submit. Do I need to? I don't have a date. Did I have a date for it? Oh, maybe I do have a date. March 8th is when I submitted that value. What? Did I really submit that March 8th? Oh, that's... No, wait. Oh, I did? Oh, no. March 8th, huh? In my defense, these spreadsheets weren't a out. That's too bad. I was tracking obviously so much was going on, right? And I was tracking so many names, and then I was just losing track. But yeah, look, I looked right on March 8th, and I put it at 23. See how that's why you got to date this stuff too, right? See how valuable that is, knowing that I did that at March 8th. I probably saw the drop, and then oh wow, okay. This week I did it this week. I'm surprised I didn't buy it now. Just too many names, tracking too much, over 150. All right. I'll do a couple tags. I don't have too many characteristics because we didn't dig into the... I'd like to add something that says cash flow. Can I add I'm going to say cash flow. I like that. Or book. Maybe book too. Like this, I didn't know how to group all these, so I just kind of tossed in some characteristics. I can always change it later. Cash flow. Book, things I looked at. That's the whole point of those tags. And I don't want to feel like typing in any. So especially I'm going to keep on using them over and over again. Book. And then anything else stick out? Maybe poor acquisition? Maybe. Or in write-downs? I don't really care. You see write-downs so often. It doesn't mean much to me. But poor acquisition would get. Poor acquisition's a good one. Poor acquisition. Anything else stick out to it? It's probably back up now, is it? Yeah. I mean, there's definitely legitimate free cash flow here. $2, you can't do. You need to project that growth. Or and it's an industrial. You gotta pay 20 times that? No. If it kept growing, I still don't like it at 20. We'll just watch list it. Any other characteristics we jot down? We already got insider buying and yeah, okay. Rebuild. Oh, Submit. Oh, we got a book. Nice. 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 I'm still getting used to using this. Oh, it's really nice. Is it a go down? I still have check just to go down. I'm like, oh, it's almost 10. Oh, damn. Oh, we got to dig into some companies. That was kind of cool. Some new companies, too. I'm glad I knew FRG because I relearned about FRG because I kind of forgot about it. And then LDL is good because, yeah, that's a good one to have in your back pocket. You know what I mean? And did we get through, as far as insider buying, I think at least we got through this. I had some other stuff I was going to do, like look at charts for the portfolio. That's okay. Kind of brought ourselves up to date. Sally Beauty, this one's interesting too. I don't think it was cheap though. I did like it down here, but it wasn't super cheap. That was my thing. Everything else looked more attractive. Do I track it? Yeah, I don't even track it. That could be a on deck one though. I've looked at it before. Okay. Okay, we did the insider buying. We did like any final things on that I'd like to check. Man, couple of man, time flies by. Did some good research and got caught up on some of the price points on some of the things too. No hard decisions, but I'm liking the stuff we saw today. Right, some things were up and looking like they were continuing. I mean, you're gonna have days where things are down, and it's not like it's a bad day or anything like that. But things looking like they're moving in favor of the portfolio for now. Insider buying on PDF, and I saw BXC was up again. Huh? That one was crushing it. Wow. We just saw it Monday. Didn't we just see it Monday? Yeah, we look at right here, and then I was talking about how it was, and then it popped even more because I reported. Hey, let me just submit this. Oh, I want to get. Where's SBH? Oh, it didn't get sent yet. It just takes time. Okay. All right. Oh, we didn't get through daily movers. All right, I might need to be faster about this. You know, like we got to get through. I didn't do this on Monday. Maybe we should start with that. I mean, you got to see what's moving. That's the thing. We'll get to a point where I'm fully caught up on the portfolio and you know a bit more about the positions. But and then what else is there to check? You'll check your positions real quickly. But remember, I'm still trying to bring myself up to speed on my positions and the rationale behind them and the price points. But and then it's like you check the daily movers. Then it's just you're in a continual state of just screening and following up on stuff. Oh, traveling TA was up. I didn't dig into this one. It's almost 1%. It was up 16% today. This one's like a lot of operating leverage there. A lot of operating leverage. I definitely bought it. I was buying right here. I bought those 2 days. Risky, but a lot of operating leverage. They own those stores on the highway and gas stations and stuff. A lot of debt, but a lot of leverage. So we'll go through, we got to go through this, and we want to go through the charts just quickly. I need to be fast about it, like go through the charts of the Roaring Kitty portfolio in 10 minutes and be fast about it. We'll get there. And then what was down today? Anything big? Nothing sticks out to me as big. TGB. I pulled that up quickly. That one looks interesting. It's like a little bit of a speculative company. I brought that up. I meant to talk about that. Tailored Brands. Oh, the ticker changed. Oh, I need to update that one. It's like TLRDQ, right? Yeah. 36%. See what I mean? The market, huh? Vapo. Do I just sell out of Vapo? I forgot about that. All right, take a look at Vapo. Look at Vapo. Yeah, I'll then that word do a Word doc. Word doc for research notes. Maybe also like what things we want to do today, you know? do my best to keep myself on track. Give some. I don't want too much structure on the stream because it's not how I work. I want it to be representative of how I work. This is what I'm doing. See, I'm all over the place. But the next, the first month, I think it's going to be for me to get back up to speed on things. But thereafter, it'll be more of a fluid process, and maybe we'll have some structure around when we do what. But Oh, Vapotherm. What was the other one, though? I guess that was the only one that was like definite. Wow, some stuff was down today. G-Pour. OMI. That's okay. Another refiner. The refiner, right? Yeah. I think Carl Icahn got involved with that one too. I owned it, but I was a little bit late to it. Oh shit. Oh shit. If it's not in the portfolio, I just got out of it. Oh, it is 0.16%. I sold a bit. I sold quite a bit because I was in PBF. Interesting. I got lucky on that. I want to say a month ago or so. I missed this. I think I bought some around here because I was like diversifying, and then I captured some of this, and then I'm like, PBF looks more compelling to me, and I sold out. So 0.16, that's obviously a small position, and now this doesn't look good. Is it? And then you're gonna ask, is this representative of refiners? Is there something going on? I mean, PBF's not looking great either. Well, actually, it does. Great for someone like me. The chart itself needs some work, but this looks a little bit. It didn't look as compelling. It was. Maybe it just needs to get revalued a bit. Like right here, it looked kind of interesting. $12. I didn't like it at $20. Maybe it's just relatively overvalued compared to PBF. I'd like to buy more. It looked good. I wasn't tracking that as close either. I was kind of like, damn, I should have been tracking that. And then Carl got involved. I'm like, how did I miss that? Down 13% today. Oof. So this is the type of stuff. We see this and then a company, then we go see what's going on, what's happening here. Want to do more of that, we'll get there. Drive Shack. All right, nothing too crazy. Mostly an update though, huh? I don't want to scroll like that. Mostly an update. GII? Yeah, what's that doing? Ah, damn, I should have done this. And because they're smaller positions, I didn't get down to them when we were looking at the Roaring Kitty portfolio. Bummer. Oh, I did see that it was coming down there. Is it saving itself? This one looked good. This one looked really good right there. The market messed up. It corrected itself. Midday. Okay. Okay, got a quick glance at the day. All right. I'll try to take some notes on these things. Thank you for tuning in. Here, I almost finished that in time. I forgot. I got a video to close out the stream. I guess I was so excited to have some people on the stream last time, you know? I forgot I had a video, like I have a closeout video within OBS to say goodnight. But so let me play that. Let me just close out of this stuff. And yeah, thanks for tuning in. I hope you enjoyed it. I hope you gained some investment insights or found it educational, whatever. Thanks for tuning in. Hope you had a good time. That's really all. But have a nice night, and I'll see you on Friday. All right, peace out. Cheers. A good night. Cheers. All right, let me see if I can play. This is my first time doing the outro. Okay, let's see how this goes. And then I think I play the outro. I don't think I have an outro like it does automatically, so I'll have to work on that too. Automate the outro. All right. Good night.